In London with Tom McKenzie.
And here are your top stories. UBS takes in $28 billion in the months before its takeover of Credit Suisse. CEO Sergio Motti tells us the lender's share buybacks are temporarily suspended and not cancelled. Santander profit beats as income growth outpaces costs. The CFO tells Bloomberg the bank is on target to meet its 2023 goals. Plus, LVMH closes in on Tesla as the world's 9th biggest listed company after the luxury goods maker's market cap surpasses $500 billion.
Tom, if you look at the futures, we're seeing a bit of pressure, so we are continuing, of course, our earnings watch. A lot of earnings coming out this week, and then we'll look at China and, of course, a bit of headwinds there.
Yeah, tech in focus today on the earnings front with Microsoft and Alphabet. We also get Mackie D's and GM out of the US as well. The futures had pointed to a bit of a mixed picture. The FTSE 100 currently flat after, again, mixed close yesterday on Wall Street. Currently the FTSE 100 down just a little over 0.1%, dropping 15 points just in the first few seconds. We're looking ahead on the macro front as well to data out of the US when it comes to inflation, of course. That's towards at the end of this week. We had manufacturing coming off slightly as well. And the Fed now, markets pricing in the Fed peaking in June and then rates coming down to 4.5%. by the end of this year. Currently, the losses now across the CAC grind over in France down 47 points of 0.6%. So some selling coming through a little bit more pronounced now in the first few seconds. The Spanish IBEX off almost 0.9%. And now in the UK, the FTSE 100 down 0.4%. Let's see what's happening. And with a reference as well to the picture in China. This is worth playing out and worth diving into. Let's switch the board and see how the benchmark has been performing, because you're looking for 5 straight days of losses now on the CSI 300, which is essentially China's benchmark, on concerns about the geopolitical drag and question marks as well, not just from investors, but leaders as well. Top officials in China pointing to concerns about the growth risks going forward. 3,962 on the benchmark over mainland China, a drop then of 0.5% in the session today. The futures also pointing lower in the US, down 0.3%. And you had yields coming in on the benchmark 10-year yesterday by about 8 basis points, now 346 on the 10-year. That's a move further of around 2 basis points. Euro dollar above 110 now, 110 on the single currency. Not a lot of movement in the session today. We'll see if there's further upside in terms of the differential. You did hear from the chief economist of the European Central Bank suggesting that the hike will come through in May. That is now locked in, according to his view. He can't extrapolate further beyond that. Fran.
Banks, one of the biggest losers in today's trading session. Tom, you can see Santander down 2.7%. And overall, if you take the 20 groups that make up the stock 600, so most of them are on the downside. You just have energy and telecom pretty much flat. And then you have banks, basic resources, financial services, insurance down between 0.7%. Now, this is a story, of course, bit of a mixed picture. So partly it's an earnings story, but also partly is a world economy story as we brace for more clues data-wise on what the U.S. does.
Yeah, and of course, within the banking sector, it is UBS that's front and center for us this morning, pulling in $28 billion from wealthy clients in the months leading up, of course, to its takeover of Credit Suisse. It is a bright spot for UBS, which missed profit estimates for the first quarter. Manus Granny spoke to the CEO, Sergio Motti, earlier.
At times of distress in the market, generally the first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different sources. And in that sense, we are very pleased that, particularly also after the announcement of the transaction, of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
Okay, Sergio Motti, of course, speaking to Manus Crani there. Let's bring in Manus Crani at this point. Manus, run us through the key takeaways then. The stock dropping around 5% so far in the session.
So it's a very interesting open. I think if you stand back from the conversation around integration with Credit Suisse and actually look at the numbers, net income dropped by over 50%. They took a knock on retail mortgage-backed securities, but also transactions down. Net interest income up in the wealth management. The flow show continued, but what you are going to hear out there is that why did they not get more of the flow show into UBS after the debacle of Credit Suisse, or perhaps even in the run-up? That's 28 billion that came in. 7 billion of it came in after the deal closed. Now, Motti, in the conversation with me, said, well, look, you know, we saw inflows from all regions, but could he pin that $7 billion on Credit Suisse? No, he couldn't. He said, this actually shows. I said, well, are you not concerned that you didn't get more of the pie? $69 billion went out the door from assets at Credit Suisse. He said, no, he said, it shows healthy competition. I think that's part of the narrative to try and allay the fears that, you know, there are other banks and institutions that you can bank with. It demonstrates competition and a fear of that concentration risk. And also their own clients went into their own money market funds. And as he said, you get a pickup in treasuries. So that flow show, I think, is point one of the angst. Point two of the angst is very clearly this momentum to
there in Zurich, and we'll play most of that interview throughout the day, so you can also catch it on our website. Joining us now, Johanna Kirkland, Chief Investment Officer of Schroeder Investment Management. Johanna, thank you for joining us. When you look at banks and when you look at some of the concerns about UBS, Credit Suisse, but in general, some of what that means for deposits to make sure that there are no outflows, does your appetite for banking stocks change?
Well, I think that we need to make a distinction between what's going on in Europe and what's going on in the United States. I mean, generally, we think the larger banks, particularly in Europe, are in good shape. And really, the concern centre still on the US with the regional banks and the deposit situation there. So that is really the way that we're approaching it. We're making quite a big distinction between what's going on in Europe and what's going on in the US.
Can you just expand on that a little bit? We had First Republic dropping about 20%, around 22% on concerns about deposit outflows at that regional bank. You talk about a divergence, or at least putting them into two different baskets, US banks versus European banks. Are we alive to the fact that maybe the banking crisis in the US has not ended?
Well, certainly we think that the troubles we saw in the United States were very symptomatic of the fact that rate hikes were biting in the United States. And so we think that tightening of conditions is likely to continue. Whether I'd call it a banking crisis, I don't know. But certainly we're in the midst of a proper rate hiking cycle. And the evidence is now that it's starting to affect the real economy in the United States. So our expectation is certainly that the US economy will be slowing and moving into recession later this year.
So, Joanna, just going back to the banks, do you play it through credit or do you play it through shares in the banks or part of the banking system or financial services that you like?
Well, I mean, for us, it's more of an opportunity on the share front in Europe. So that's been our focus.
Okay, and you're seeing the growth slowing in the US. Does that complement the kind of calls we're getting from some market participants? You're going to get rate cuts coming through from the Fed. 4.5% is the market call now on the terminal rate by the end of the year. Does that align with your view?
Yes, I mean, certainly we can't see how the Fed would be cutting rates in the absence of a meaningful slowdown in the US economy. So something has to give. And I think that's the challenge maybe with equity markets overall, is that in some sense, we've seen equity prices rise on the expectation the Fed will be cutting rates, but maybe not focusing enough on the fact that if they are cutting rates, it will be because we'll be seeing a meaningful slowdown. So yes, what's priced into the bond markets reflective of our view on where the US economy is heading.
Joanna, when you look at the next pitfalls, I know we talk about U.S. commercial real estate quite a lot of worries also surrounding treasuries because of the debt ceiling. Where do you see the next fault line?
Well, hard to predict, but I think that it is very much in the US. As I said, the fact that now we're seeing the regional banks under some pressure means that we're sort of getting the next sort of fall in the domino, essentially. So for us, it's very much centered on what's going on in the US regional banks.
How do you hedge around those risks?
Well, we're overweight duration. We have been pretty much since the beginning of the year, really on the expectation of this slowdown. And it's been interesting to see that bonds are starting to have that negative correlation with equities again. Last year, they didn't offer any diversification whatsoever. We think this year they do.
When you look, Joanna, further afield, is there anything that you'd be selling off? If you look at the U.S. as maybe something that could stabilize, are there opportunities in Europe, emerging markets, and China?
Yeah, our concerns on the equity front are very much focused on the United States because we've been very much positioned for this Fed hiking cycle. I think the outlook looks better elsewhere in the world. We are more positive on Europe and Asia. So generally, yes, more optimistic on the rest of the world. But ultimately, if we see a recession in the United States, and given that also in Europe, we are having some challenges in terms of persistent inflation and very tight labour markets, which mean, again, we expect more rate hikes in Europe, means that, we need to be careful to assume too much divergence as the year progresses. But for now, yes, our focus is really on the US to the extent that we are negative on equity.
And Joanna, you touched on Europe there. We have a Bloomberg strategist survey pointing to a downside, in fact, for European equities by the end of the year, getting down to 450. This is according to the survey. We're currently at 466 on the European benchmark. Is that overly negative, do you think, on the prospects of a slower economy and higher rates?
I think potentially it's a bit too negative. I mean, generally we have in the last decade really favoured the United States, but I think right now we do have a window of opportunity for Europe to perform better, which is not a view we've had for a very long time. So I think that maybe the pessimism of the last decade is making it difficult to believe in the European rally, but generally we do see that the prospects for European equities are better for this year.
Okay, Europe over the US, at least for this year. Joanna Kirkland, CIO of Schroeder Investment Management, thank you very much indeed. Coming up, European bank earnings in full swing. We're going to bring you more of our conversation with the newly reinstated UBS CEO, Sergio Ermotti. It's the conversation of the day, plus our exclusive interview with Santander's CFO, I should say, Jose Garcia Cantera, Santander's CFO. That is next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg UK, your source for news and analysis analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. 13 minutes into the European trading day, we are seeing quite a lot of pressure across the board. Now, this is twofold. A lot of the focus, of course, on earnings. Some companies disappointed. It is another rest of the week that's very busy for earnings. China's economic and geopolitical headwinds are also weighing on sentiment. And then we have a slew of data out of the U.S. Let's also check UBS. I would point everyone to go and listen themselves to what Sergio Armati told Armanis Cranney. Now, there are concerns about profit going forward, although the inflows from client money has been also pretty impressive, some $28 billion before they took over Credit Suisse. The share price did start lower by 5%. It's now down 3.6%. Usually some of these things actually settle. The UBS chief executive also now briefing analysts saying the buyback has been paused, but not canceled. So he also says, of course, that the buyback plans are temporarily suspended. The importance of this, which is why every word matters, is that it has not been canceled as it grapples with historic integration with Credit Suisse. Now, Sergio Armati sat down with our very own Armanis Cranney in Zurich earlier.
At times of distress in the market, generally the first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different sources. And in that sense, we are very pleased that, particularly also after the announcement of the transaction, of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
The chairman guided us at a number of times that the integration would take 3 to 4 years. Is that a low ball and a low bar? Or again, is that a reasonable guidance?
I think it's reasonable guidance. I mean, this is a complex transaction. I think that, but it's also a transaction that will offer a huge opportunity, not only to our shareholders, but also to our clients. The two franchises are extremely complementary, and in many areas, and also to our employees. But in order to fully execute a transaction of this complexity, it takes time. And we have to do the things in the right way. We should not hurry into doing things that, and just for the sake of closing the transaction in a couple of years earlier.
Again, what kind of milestone do you have? You've thought about this. You've thought about this deal for many years. You, Axel Weber. What is the milestone in your mind that says I'm really succeeding in this integration?
Well, for me, is more emotional than numerical. I would say that in 3 to 4 years' time, I like to see the employees of the combined organization, this country, our clients, to be very proud to be associated with the new UBS.
There is a lot of social and political angst out there on Bahnhofstrasse and around over the Swiss Universal Bank. Lots of people come and say they're going to have to give up a piece of the Swiss Universal Bank. He's going to have to IPO to appease the people out there. Again, your response to that kind of speculation?
I'm glad you met some of them. I mean, it looks like we have a lot of experts nowadays on how to run banks in Switzerland. So I think that the only thing I can say is that we will take our time to make decisions based on facts and not based on emotions. And I'm sure it's going to be a good transactions.
That was UBS CEO Sergio Armati, of course, speaking to Bloomberg's Armanis Cranney in Zurich this morning. It is the interview of the day. Currently, the stock down close to 4%. Let's get your other stocks on the move. Joe Easton from our equities team. Joe.
That's right, Tom. So we are seeing some small weakness in LVMH today. This after the company yesterday became the first European firm to reach a market cap of $500 billion. I was tasked with watching that stock all morning yesterday, waited about 3 hours for it to hit that level and finally sent the red headline on the terminal. In terms of what drove that, yesterday it was mainly the euro move pushing the dollar value higher. However, they are clearly doing well over in China in terms of the China reopening, and also some resilient sales over in the US. We've got Kering earnings coming up this week. Gucci, that's the next big one for LVMH in terms of the luxury sector. But as I say, that one down around 1.3% today.
Yeah, interesting actually to see that Chinese appetite. Talk to us about something that's not that luxurious, but just as important, AB Foods.
That's right, so we're at the opposite end of the scale in terms of clothing. AB Foods, the owner of Primark. Now, they are today warning that potentially people are going to start cutting back due to the cost of living crisis. You know things are getting bad when we're cutting the terms of demand down at companies like Primark. So that one is the worst performer today on the FTSE 100, down around 4%. Their margins are actually holding up pretty well. They've warned a lot about the impact of rising energy costs and wages here in the UK, so that's a potential bright spot. But the sales outlook in terms of them saying consumers might not be that resilient is really what's hitting that stock this morning.
Yeah, that's interesting, isn't it? Because on one end, you might think that they would be part of the beneficiary of the move down to kind of cheaper clothing. When it comes to food then, Joe, Nestle in focus, how are they doing on the margin front?
That's right, so this is another company that's supposed to be pretty resilient given it is a staple goods company, but their margins have been the big concern, as you mentioned. That's hit the stock. It's really slumped over the past year given the rising raw materials in terms of the food and ingredient input costs. But today, their margins are actually holding up a bit better than analysts had expected. In terms of sales, it's Kit Kats are the strong point, and also pet food, whereas coffee, surprisingly, is a weak spot for that stock. But nonetheless, the margin impact really the big beneficiary today, and that one is up 1.6% over in Zurich.
I feel like pet food, Joe, is just as expensive as a Louis Vuitton handbag. But that's a conversation for another day. Our Joe Easton from our equities team. Now, coming up, discount grocers are winning over more British shoppers as double-digit food price inflation continues to eat into budgets. We'll get the details next, and this is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
The Bank of Japan holds its first monetary policy meeting under new leadership. Will they put the brakes on the recent stimulus boom, or is it full steam ahead with the BOJ's yield curve control? Bloomberg TV has full coverage of the meeting and analysis of what it means for the market.
Our BOJ team in Tokyo has learned the latest findings of what we can expect.
Policy normalization has to start at some point.
I would like to do my best to reach the target within 5 years.
It all happens April 28th on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 23 minutes into the European trading day. Losses of 0.5% across the benchmark. Risk off today as the futures in the US also point to losses on the S&P E-minis of around 0.4%. There's a move into treasuries, yields are coming in, and there's a move into the dollar as well. The dollar currently gaining about 0.1%. Across your sectors, just two that are clinging on to gains this morning here in Europe: food and beverage and healthcare. Everything else is in the red. Let's get the Bloomberg First Word News Business Flash, in fact, with Sam Etienne. Sam.
Morning, Tom. The president of the Confederation of British Industry says the lobby group may not survive a scandal triggered by multiple allegations of sexual assault and harassment, among staff. In an open letter to his members, Brian McBride said he hoped the CBI, the UK's biggest business group, could return as a reformed organisation, quote, whether or not that is possible. And First Republic Bank plunged in US late trading after quarterly earnings reignited investor concerns about prospects for its business. Results included a worse-than-expected drop in deposits, tumbling more than 40%. First Republic says it will cut as much as a quarter of its workforce, lower outstanding loan balances, and curb other non-essential activities. And the number of people looking for work in the City of London increased in the first quarter, while the number of open positions dropped by almost a third. The data from Morgan McKinley highlights a tough job market for bankers amid economic uncertainty. For those in finance who do manage to switch jobs, the average salary bump was 18%, the lowest salary uplift in nearly 2 years. That's your Bloomberg Business Flash. Tom.
Etienne, I'm going to pick it up from here. Now, discount grocers are winning over more British shoppers as double-digit food price inflation cuts into household budgets. According to market research group Kantar, annual shop price inflation dipped slightly to 17.3% in the latest 4-week period. Now, for more, let's bring in Bloomberg's UK correspondent, Lizzie Burden. Lizzie, thanks so much for joining us. I mean, 17.3, this is extremely high. Can you break it down for us?
Well, we already knew from the official data that UK inflation is still in double digits in March and that food was driving it. So the good news is from this latest Kantar data, you can see an ever so slight slowdown in grocery sales inflation to 17.3%. But it is the 10th straight month it's still in double digits. The fastest growing categories are the absolute basics: milk, eggs, cheese, the stuff that everybody has to buy. And what you can see is the way that consumers are responding to this is by flocking to own brand lines. So they're up by sales 46% year on year. And you have to ask yourself, where do these customers go from there? And you have to ask yourself, what's the Bank of England going to do in response? So we heard from the Deputy Governor, Dave Ramsden, on Friday. He said he's specifically concerned about food price inflation. He says that the risks of inflation outweigh those of over-tightening, and you've got markets currently pricing a 5% peak for interest rates by September. But what's interesting is, when I speak to economists, they say one of the reasons that they keep on underestimating inflation is because of the difference between CPI and PPI. You can see that there's evidence of price gouging going on here. So you can understand perhaps partly why policymakers still think they need to resort to the blunt tool of interest rates to deal with it.
Price gouging. Very briefly then, Lizzie, what are the public finances here in the UK looking at?
Well, you saw in the latest data that the Treasury ends the year with a deficit of, it's below 13.2% below the official forecast. Now, that's despite all that they spent on the energy subsidies. It's despite the big spike in debt servicing costs, but it's largely because you've got higher tax revenues. But as we often say, Britain's tax revenues reaching the highest since in the post-war period.
Lizzie, thank you so much. Lizzie Burden. We'll have plenty more on the markets shortly. This is Bloomberg. what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Was going to keep rating World Cup. This is a 3 as the economic picture down.
The BOK is getting ready to make a decision.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. UBS takes in $28 billion in the months before its takeover of Credit Suisse. The chief executive, Sergio Armotti, tells the lenders share buybacks are temporarily suspended and not cancelled, while shares slump at the open. Santander profit beats as income growth outpaces costs. The CFO tells Bloomberg the bank is on target to meet its 2023 goals. Shares slip, plus LVMH closes in on Tesla as the world's 9th biggest listed company after the luxury goods market cap surpasses $500 billion. Tom, what are you looking at in the markets?
It is risk off across these markets today. You're seeing losses of around 0.6% across the European benchmark. The picture as well over from Asia, particularly pronounced when it comes to mainland China. The view may be that geopolitics is leading to a turn in terms of sentiment on Chinese stocks, closing lower for the 5th straight day. Here in Europe, then, down 0.6% across the benchmark. The DAX off by 48 points, and the FTSE 100 back below 7,900, off by 43 points in the session so far. Of course, we continue to look at the data that comes through, what it means for the Bank of England. When it comes to the US, we have GDP data out later this week, and then PCE core deflator data as well. And what that means for the Fed, the market's pricing in a turn by June. Peak rates in June, and then markets rates coming off by about 4.5%, below 4.5%. So that is continuing to be digested by these markets. The VIX index, by the way, we can switch it over and look at how things are playing out across these sectors. As I touch on what's happening with the VIX, the volatility gauge at a 17-month low. JP Morgan's Kalanovic saying that this could be painting a picture of false calm. Across your sectors, every single sector in Europe is in the red this morning. Banks taking a big hit, down 2.2%. UBS is part of the mix there, and we continue to keep across that story with that interview with Sergio Armotti. Just one sector in the green, food beverages, currently up 0.3%. Treasuries are bid, yields are coming in, and the Bloomberg Dollar Index is edging higher this morning. Fran.
Now, Tom, it may not be a household name, but Autodesk has helped shape the world over the past 40 years with the industrial design software. Tesla cars, Petrobras oil drills, and New York's One World Trade Center were all designed with Autodesk software. Well, joining us now is the Autodesk Chief Executive Officer, Andrew Adagnost. Andrew, thank you so much for coming in. If you're designing software, I imagine that when you go and meet clients, which is what you're doing here in London, they ask about AI.
Yes.
Is this a benefit for Autodesk, or does it put you out of business?
Actually, what it does is it allows us to do things for our clients in really new and unique ways. I mean, I think one of the things that's exciting about the current conversation about ChatGPT is it's kind of showing us what AI can do and actually what it can't do. And what you see with things like ChatGPT, and we're going to be rolling out similar things for our clients, is that it allows you to kind of do first drafts really well and then refine the first drafts. And there's a lot of grunt work associated with doing some of the design things that people do with our software. And it's basically going to eliminate some of that work and allow people to engage much more in the creative process. So we see a partnership between the AI and the designer or the engineer that's going to be much more sophisticated and much less kind of click and point with the software.
And there are a lot of concerns, I mean, ranging from the ethical to what it means for jobs. Does that mean the way that you're integrating it into your business and the services you provide, does it mean that you're going to have a lower headcount in the years ahead as a result of that integration of AI?
Yeah, so certainly. There are going to be fewer people per project. But let's be super clear about our industry in particular, because our industry is the industry of building things. It's products, it's buildings, it's infrastructure. We have a serious capacity problem in this industry. There is not enough capacity, dollars, people, materials to build everything that needs to be built. So right now, what these industries need more than anything is productivity gains. So yes, there are ultimately going to be fewer people per project, but people are going to be putting more projects through the system. And I think that's one of the things that we have to look at in the calculus of all of this is, yes, fewer people per project, but more project capacity.
What does that mean on how Autodesk will actually change? Then what kind of company will you become in 2-3 years?
Yeah, so we're always a design and make services company. This is what we do. We deliver tools for connecting and designing and making things. That is fundamentally not going to change. However, some of the work we're going to be doing is a lot more related to the data that our customers accumulate and how we use that data and how we turn it into insights that they can then actually, come up with design. So we're going to be much more deeply integrated into their design decision-making process than we are today. There's no doubt about it.
Which platform? Are you using OpenAI? Are you using one of the Alphabet products, someone else's product? What is the platform they're using?
Yeah, so we build off of Amazon primarily, but we also use Microsoft services as well for AI. Fundamentally, though, because what our customers do is unique and more complicated, we're going to have to build some of our own large language models and multimodal models off of some of our customer data as well. We're actually actively doing that. But we will use these horizontal tools like OpenAI's tools when they're appropriate. But we have significant vertical value that we have to create in our space.
Andrew, when you look at the changes post-pandemic, what does it mean for hybrid work? What does it mean for people coming back to the office? And therefore, what does it mean for some of the services that you offer?
Yeah, so a lot of our customers are actually actively reconfiguring spaces. So there's early on during the pandemic, a lot of people were saying, well, they're not going to build office buildings anymore. Autodesk, are you going to have any office building business left? The truth of the matter is people may build fewer office buildings, but they're constantly reconfiguring them for the way their workforces now work. So they're having to create spaces that are more about collaborating, gathering, and less about kind of having lots of places for lots of people to sit all day long.
As you said, you're in the industry, you're in the business of construction, whether it's construction, engineering, manufacturing. We're heading potentially into recession. That seems to be consensus call, certainly in the US. Are you seeing a drag, are you seeing a slowdown in orders from your clients?
Yeah, so right now we are seeing still a backlog of work in most of the construction space. However, when projects go from costing, 10 million pounds to 12 million pounds, people start to scale back. So if the inflationary pressures continue, you're going to see a decrease in the number of projects that are being put into our customers' pipeline. But the pandemic left a lot of them with backlog, and they're still working through the backlog. So their backlog is building slower now. If this continues a long time, they're absolutely going to see pressure, but we don't see it yet because of the backlog.
So when does that change?
Well, it's hard to say, all right?
It's always hard to say.
It's very hard to say how long this is going to last. So I don't want to predict when that might change. But right now, they're still filling their backlog. They're just filling it slower than they were before.
Is the worst of the bear market around software, do you think that's past us now, or is there further downside for this sector?
I think people have priced in what their expectations are moving forward into the markets. It's always difficult to speculate about what's going on with the markets, but I would say that people have probably priced in a lot of what's going on there. Software had a fairly significant correction coming out of last year.
Do you take advantage by looking for acquisitions?
Oh, we're always looking at the market. We're a very acquisitive company, and valuations are changing. But there's always a lag between when valuations actually change and when people have a perception of that their valuation has changed. But we're always an acquisitive company. We're always looking at opportunities.
So what are you looking at right now?
Well, I can't.
If you had, let's make this a supposition. You have $1 billion and you can look at anywhere. What part of the world looks attractive and what kind of...
So we always, when we look at things, if it's something close to our core business, we try to build it ourselves. It's always better for a company to invest in software building close to their core capabilities. But if it's adjacent and it's something that's kind of surrounding our space, we're absolutely acquisitive. So recently we acquired a water solutions company, Innovise, which we have a big business here in the UK with Innovise, with Thames Water. And we've bought companies related to construction. These are things that wrap around the core of our business. That's where we generally tend to be acquisitive.
Maybe you can talk to Thames Water about stopping the leaks and the sewage into UK rivers.
Well, they're using our software to do real-time digital twins.
Okay, well, let's hope that's going to help. Talk to us about transitioning to the cloud. This is a process that's ongoing with your business and many others. What percentage do you think, when do you get full capacity in terms of all your services integrated and on the cloud? What is the time frame for that?
Yeah, so look, it's never done. You're always continually moving stuff to the cloud. Most of the new software we build is all cloud native. So for instance, all our construction management solutions, that's 100% cloud native. All of our new solutions like Fusion, and we have something called Forma for the building design space, those are all 100% cloud native. The pace at which the customers move to the cloud is often more governed by their project schedules than by what we deliver. Once a project starts, some of these building projects go on for 10 years, they're going to stay on what they're on right now, and then they'll move to the new stuff when that project's over.
Okay, really, really interesting, Andrew. Thanks for coming to the studio, talking us through what is going on in your industry, the demand as well for that software around engineering, construction, and of course manufacturing, many other parts of this global economy. The CEO of Autodesk, Andrew Anagnost. Right, coming up, China's deepening stock sell-off shows traders losing confidence. We're going to discuss with Mark Mobius from Mobius Capital Partners next on the impulse around China and the broader EM space. That is next. This is Bloomberg.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Earnings season is here.
We haven't had a shocker yet.
They are minting money.
Markets are still volatile. I think
It's going to be choppy.
Bloomberg breaks the numbers first.
First quarter results impressive.
The revenue beat is amazing.
With exclusive expert analysis.
This is really important to watch.
Buy on the fear, sell on the news.
Where is the upside in this market?
Do we get answers to that today?
The bottom line speaks for itself, and that's what moves markets.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open. We are 43 minutes into the European trading day. Risk off across these markets, down 0.6% on the European benchmark futures in the US, also pointing lower by 0.5 on both the S&P E-minis and the NASDAQ futures. And treasuries are bid yields coming in once again after the 8 basis point move on the 10-year, lower on yields yesterday. You currently see the 10-year at 3.45. The Bloomberg dollar index is bid up 0.1%. Euro dollar at 1.10. Part of the risk-off sentiment is coming through from China. A sell-off in Chinese equities is deepening. That's as traders weigh a barrage of economic and geopolitical risks, with global funds accelerating their exodus. The MSCI China index lost as much as 2% Tuesday, heading for a 6th day of declines. It did, in fact, notch up 6 days of declines. It's the longest losing run since October. Let's bring in Mark Mobius, founding partner at Mobius Capital Partners, and one of those few people with so much ingrained experience around the EM space. Mark, when you look at what's happening in China and the turn in sentiment, particularly from foreign investors, is this a fade of the China growth story?
Unfortunately, that's the case. You must remember that China now is a huge country and cannot grow at the rate that it grew 10 years ago. You know, it was growing at 10%. This is gone. This cannot be done anymore because of the size of the economy. But added to that, of course, is the geopolitical situation. You know, the recent comments by the foreign minister, one of the foreign ministers in China about Eastern Europe, and then comments about the Philippine buildup by the U.S. All these things are increasing tensions, and it scares a lot of institutional investors that would be normally willing to put a lot of money into China. So it's a real problem. That's the reason why you see this kind of a performance. What's surprising to me is that the domestic market is not very good. In other words, if you look at the Chinese index, it should at least be 50% composed of domestic investors. So what we're seeing is a lack of confidence on the part of domestic investors in China, which is also not a very good sign.
Mark, give us a sense of what you think then this means. I know there's been a couple of central bankers and even Janet Yellen talking about fragmentation because of geopolitics. But as an investor, how do you play this?
Well, I think the only way to play it is to go through Taiwan. You must remember, trade between Taiwan and China is very, very big. And you can get exposure indirectly by investing in Taiwan. And if you look at the Taiwan market, it's done very well. Particularly in the tech area, that was the way to get exposure to China indirectly. And then maybe a few Hong Kong stocks that are getting exposure to China, but are a little bit separated from the China situation. So I think that's the way to do it.
Okay, that's really interesting. You played China through maybe the semiconductor play of Taiwan. When it comes, Mark, to technology, you've seen a raft of measures now to kind of ease back on some of that regulatory squeeze from officials in Beijing, coupled with, of course, the reopening impulse. But the fade, again, around tech has been quite significant, quite marked in the last few weeks. What do you make of the prospects for China tech in the months and quarters ahead?
Well, there's no question that China is going to be very aggressive in getting the highest technology in tech, in semiconductors in particular. So that's not going to end. And actually, it's kind of bullish for a lot of the subsidiary firms, the so-called fabless firms, because they'll be serving now 2 customers instead of 1. They'll be serving the U.S. market and the Chinese market. So that's the reason why we're kind of bullish on the Taiwan stocks in that area. But no question, tech is going to be continuing to grow and will be very big going forward.
Mark, no offense, but Taiwan seems a bit like a hotspot at the moment. What do you think China's intentions with Taiwan are?
there's no question what their intentions are. What the actual ability to actually take action is another question. And I think that's far away, particularly given the buildup by the U.S. in the Philippines, and particularly the comments by American leaders. There's no question that there's going to be a lot of pushback by the U.S., so I doubt if China can make a move at this stage.
Mark, we can't talk about the EM space without talking about the greenback. The dollar, the Bloomberg Dollar Index, down about 10% from the highs of October. Do you see further downside for the greenback, and how much of an impetus will that be for EM?
Yeah, I think there will be further downside, not much. As you know, there's a lot of talk about alternative means for people to do trade without using the US dollar. And of course, China is leading that effort. They want the renminbi to become a reserve currency, but that's a long way away. I mean, they talk about, for example, the BRIC currency union. It's just not going to happen. I don't see that being practical at all. But there's no question there are more and more talk about replacing the dollar as the reserve currency. But current now, dollar is king. And of course, the weakness is partly because a lot of these currencies around the world went too far in the opposite direction, and now they're coming back. So, for example, the euro is probably going to get better, and that's a big weighting in the dollar index.
Mark, what do you do with a possible default of the U.S.? We're looking at the debt ceiling, unclear exactly when the deadline is, and frankly, unclear what, how the House will vote on it.
Yeah, we've been through that a number of times, as you know, and I think the market is pretty much inured to this kind of situation. They know at the end of the day, Congress is going to come to the table and pass the bills that have to be passed and pass the budget. So I don't think there's going to be a big factor. But of course, in short term, that's one of the reasons why you see the weakness in the dollar. But longer term, it won't be a problem.
Mark, do you align with the view that emerging market debt is a place in which to position on those easing inflation concerns, on the view that the central banks of the emerging market world were ahead of many of the developed markets by raising rates? Now they're getting to that peak, if not considering cuts. Is EM debt looking attractive?
Yes, I think it's a good idea to begin looking at EM debt. Maybe a little bit too early, wait a while longer. But generally speaking, yes, some of these yields are looking very attractive. And given the fact that the U.S. is going to start moving in the opposite direction in terms of interest rates, then these emerging market debt instruments, some of them look quite interesting.
Mark, thank you so much, as always, for joining us. Mark Mobius, founding partner at Mobius Capital Partners. Now, coming up, European banks' earnings in full swing. We'll bring you our conversation with the newly reinstated UBS chief executive, Sergio Ermotti. That interview done by our Manus Cranny on the ground, plus our exclusive interview with the Santander CFO, Jose Garcia Cantera. Both interviews coming up. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Welcome back to the Open, everyone. 53 minutes into the European trading day. For the moment, we're still actually seeing declines across the board. European stocks down 0.5%. Again, investors parsing a lot of earnings reports. So we have a slew of earnings, especially from the banks. And then they look at China, and we look ahead to, especially Thursday and Friday, a lot of the data out of the U.S. So let's also have a quick look at some of the banks that are on the move. We had UBS, that great interview that our Manus Crani did there with the Sergio Ermotti, the newly minted chief executive. Some of the other big companies, of course, we had Nestle. We also had Kuehne Nagel, a drug maker, and all of these earnings beat. Despite that, you can see Nestle only gaining some 1.2%, and then concerns about AB Foods down 5.3%. Now let's get straight to the Bloomberg First Word News with Samuel Etienne. Hi, Sam.
Hi, Francine. China is looking to distance itself from remarks by its French envoy, who questioned the independence of former Soviet states. The Chinese embassy in Paris says the comments by Liu Xiaoye were a personal point of view. A foreign ministry spokesman added that Beijing respects the status of ex-Soviet republics as sovereign countries. And shares in Fox closed down almost 3% after the company said it's parting ways with Tucker Carlson, its most popular primetime TV host. His departure comes after the network's $787 million settlement with Dominion Voting Systems. Fox will employ a series of rotating hosts in Carlson's 8 p.m. slot until a successor is named. Meanwhile, CNN anchor Don Lemon says he's been fired from the network. Lemon was previously taken off air for comments about Republican presidential candidate Nikki Haley. And the U.S. says Sudan's two warring factions have agreed to a 3-day humanitarian ceasefire. Secretary of State Antony Blinken says the leaders of the Sudanese army and rival Rapid Support Forces halted fighting after intense negotiations over the last 2 days. Foreign governments have accelerated efforts to repatriate staff amid a full-blown battle for control of the North African nation. And the UK government is set to unveil new legislation that could lead to a crackdown on Silicon Valley. Big tech firms such as Google and Meta Platforms face more oversight and fines of up to 10% of global sales for practices that hurt consumers. The legislation adds a new digital markets unit within the UK's antitrust regulator. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne. This is Bloomberg. Francine, Tom.
Sam Etienne here in London. We talked about the equity markets, risk off as we are seeing, but it's also worth pointing out that the China impulse is fading, not just when it comes to equities, but also, of course, the story around iron ore and commodities. So Brent is getting a bit of a leg up this morning, but still it's been under pressure, of course, over the last few weeks. Part of that, yes, there's the geopolitical risks around China, but also Chinese officials themselves talking about risks to that economy. We know that demand is softer than many had expected for some of these commodities. Iron ore at 103, Brent's just holding above $83 a barrel, gaining 0.3%. Also worth noting, there is a move into treasuries. Once again, treasuries are bid, yields are coming off. There's plenty more coming up. Stay with us. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question its industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. UBS shares fall despite the bank pulling in $28 billion in the months before the takeover of Credit Suisse. The chief executive, Sergio Ermotti, tells us the lenders' share buybacks are temporarily suspended and not canceled. Santander also trading lower as deposit outflows overshadow a profit beat. The CFO tells Bloomberg the bank is actually on target to meet its 2023 goals. Plus, LVMH becomes the first European company to reach a market cap of $500 billion thanks to booming luxury sales in China and the strengthening euro. Now, let's check in on the markets. A bit of pressure actually across the board. We have many earnings. Now, the big ones to watch out for in the U.S., Microsoft and Alphabet. In the meantime, we're seeing a bit of pressure. European stocks down 0.5%. Partly, it is companies that actually missed earnings. And there's also a lot of concern about geopolitics, what happens between China and Taiwan, as we also have, for example, the German Chancellor Olaf Scholz trying to assuage some of the tensions with China and asking for the meeting. Now, UBS did miss estimates for profit. That's according to first quarter results. The bank did attract $28 billion. So we'll see how the share price evolves throughout the day. The U.S. 10-year yield, as we look into quite a lot of data coming out of the U.S. Thursday and Friday, currently at 3.45 to 3. Now, in terms of the European map, one of our biggest stories. Now, we know that Bernard Arnault, of course, the founder and chief executive officer of LVMH, is the world's richest man. What was a surprise yesterday is that despite some of the good news already put in there, the CAC 40 has now the biggest valuation in terms of a European company. It surpassed $500 billion for the first time ever for a European company. That's LVMH. The CAC 40 today down 0.7%. Now, UBS has pulled its $28 billion from wealthy clients in the months leading up to its takeover of Credit Suisse. It is a pretty bright spot for UBS, which actually missed profit estimates for the first quarter. Well, our Manus Crowley spoke to the chief executive, Sergio Ermotti, earlier.
At times of distress in the market, generally the first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different sources. And in that sense, we are very pleased that, particularly also after the announcement of the transaction of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
For 9 years, we sat together and we talked about dividend buyback, dividend buyback, dividend buyback. Here we are We're in a pause mode. People are saying to me 2026 before it restarts. Is that a reasonable guidance to the market today, that it's 2026 before you can smell a buyback restart?
It's too early to talk about buyback. I think what is important is to say that we pause it and we haven't canceled it. So our intention, as soon as we have more visibility about all the numbers and our plans, we will have also a better view on our capital return strategy. At this time, we are reiterating our intention to have a progressive cash dividends increase every year, and we are definitely have an intention to resume share buyback when it's appropriate.
The chairman guided us at a number of times that the integration would take 3 to 4 years. Is that a low ball and a low bar? Or again, is that a reasonable guidance?
I think it's reasonable guidance. I mean, this is a complex transaction. I think that's, but it's also a transaction that will offer a huge opportunity, not only to our shareholders, but also to our clients. The two franchises are extremely complementary, and in many areas, and also to our employees. But in order to fully execute a transaction of this complexity, it takes time. And we have to do the things in the right way. We should not hurry into doing things that, and just for the sake of closing the transaction in a couple of years earlier.
Again, what kind of milestone do you have? You've thought about this. You've thought about this deal for many years. You, Axel Weber. What is the milestone in your mind that says I'm really succeeding in this integration?
Well, for me, is more emotional than numerical. I would say that in 3 to 4 years' time, I like to see the employees of the combined organization, this country, our clients, to be very proud to be associated with the new UBS.
There is a lot of social and political angst out there on Bahnhofstrasse and around over the Swiss Universal Bank. Lots of people come and say they're going to have to give up a piece of the Swiss Universal Bank. He's going to have to IPO to appease the people out there. Again, your response to that kind of speculation?
I'm glad you met some of them. I mean, it looks like we have a lot of experts nowadays on how to run banks in Switzerland. So I think that the only thing I can say is that we will take our time to make decisions based on facts and not based on emotions. And I'm sure it's going to be a good transactions.
Downsizing these combined institutions is going to involve, as you said, reducing risk-weighted assets, but it's also going to be a social cost in terms of job losses. How quickly will that pain be felt across the group in your initial estimate at this juncture?
This is by far the most painful part of the job, but I'm confident that we will do that, first of all, with full respect of the people involved, fair and as transparent as possible. Having said that, you know that we are, particularly here in Switzerland, is a pretty aging population. A lot of people are retiring in the next few years, and I'm pretty sure that we will be able, through that and also through natural attrition, to mitigate at least the social cost.
Tell me this, we're back in the banking hall. Are you back in your old office?
Yes.
How does that feel?
Good feeling. I think I was very honored but humbled about this new task I have, and the feeling is good, but also there is a clear sense of responsibility to make sure that this thing goes in the right direction.
Well, that was Sergio Ermotti, the Chief Executive Officer of UBS, speaking to our Manus Cranney earlier this morning. Now, Manus joins us with the very latest. Manus, it was a wonderful conversation, very in-depth, and of course, he's still trying to figure out exactly what it looks like executing this massive deal. What were your key takeaways?
I think from the business point of view, they are as afflicted as everybody else. Down in transactions and net income that missed, they took a swipe and a provision for a legacy issue from 15 years ago. Transactions are down, net interest income is up, money's moving to money market funds. Those are the facts of the day. They are the affliction of banks at the moment around the world, Francine. But my take is this, why is the stock down 5% and bouncing at the moment? We're now back at a valuation on Credit Suisse. It's Bloomberg Mobile, by the way, everybody. Bloomberg Mobile. We're now back at a level which is before this transaction. They paid $3.3 billion for $54 billion of equity. This stock price does not reflect the Goliath that can become. And there's a fundamental disappointment this morning that the flow show didn't deliver a little bit more. Yes, 28 billion bucks came in net new money, 7 billion of that we know in the 10 days after the transaction. Ermoti's back to me in terms of why did you not get more? Why are you disappointed? Was, well, it shows that there's great competition out there. So the flow show needs to go out into Europe and go, well, where did the other 61 billion of assets that went out the door from Credit Suisse go to if you only got 8?
Yeah, so Manus, first of all, Bloomberg Mobile, I mean, a lot of people couldn't actually be without it. Give us a sense of what happens next. What did he say about the global banking landscape and how he will put these two banks together?
He was very guarded and very cautious. A couple of interesting things, though, I think. If you go back and sit and listen to what Ermoti said, we love this deal. I mean, you miss it. If you don't listen hard, you miss it. We love this deal. There's a reason why he loves this deal. But to integrate this bank, he made it clear demographics are going to play a big part. You asked about the Swiss Universal Bank at the news conference that night when the marriage of disequals was created. And I asked him about how quickly can you integrate and downsize the investment bank. His response was, and the overall institution, which demographics here are going to play a part. There will be a large part of attrition. So I can't forecast how many jobs are going to go. That's not what I'm here to do. But I can pick up the nuance of the language from the CEO, where he's talking about Switzerland, the demographics, the aging population, attrition, and people who naturally leave the institution will be a part of the narrative from Ermoti. He was humbled to return to his own office, but my gosh, he was frustrated with those new sages of banking on how to turn around the Swiss Universal Bank. That was a sense of frustration I felt.
Manus, thank you so much. As always, great interview. A lot of people are very happy to have Sergio Ermotti back, not only to run the bank, but also for your interviews with him. Central banks, this is breaking news. Central banks will revert from a daily to a weekly 7-day maturity operations. Now, what that means, does it mean that actually they're seeing less liquidity concern, or that the pipeline affords them to be a little bit less on the money day by day? For the moment, unclear why this decision was taken, but that Bloomberg red hot sticky, which is what we call our most important breaking news. Central banks will revert from a daily to a weekly 7-day maturity operation. Coming up, First Republic reports larger than expected deposit outflows. We'll look at what that means for the wider market and U.S. banking sector. That's next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
While I like home runs and grand slams in baseball, at A-Rod Corp here, we shoot for singles and doubles, and we definitely never want to strike out.
The deposit flight at regional U.S. lender First Republic has reignited investor concerns over broader financial stability and what it means for monetary policy. Now, the bank reported worse than expected outflows, with deposits plunging 41% in the first quarter. Now, this broke with more than a week of industry earnings reports that had broadly reassured the markets. Now, joining us is Diana Moa, Chief Investment Officer at Long Biased Strategies at Kurzweil Asset Management. Diana, thank you so much for joining us. First of all, it's a real pleasure to see you in the studio. There's so much going on with central banks, exactly what they're trying to do. What do you worry about the most? So are we betting wrong of what the Fed does? And do you worry that there's something ugly in the economy around the corner?
Well, I think one of the things that's been interesting this year so far is just the resilience in the growth numbers that we're seeing both out of the US and out of Europe. It puts policymakers in a hard situation because what we're starting to see feeding through is the lagged impacts of monetary policy. So you mentioned the First Republic earnings. I think, banking sector stress is becoming much more of a concern for markets going forward, and that's more of a forward-looking hit on growth going forward. Now, what worries me is policymakers are now stuck between a situation where inflation remains high, the economy is flagging amber, so we're no longer in a green, growth is great, you can keep hiking aggressively, but inflation expectations simply aren't coming down as fast as they'd hope, which puts the outlook for the second half of the year as potentially quite challenging for markets.
But Diana, overall, is there a second banking crisis around the corner? Is it because of digital mobile banking and we move things around, or is it just a simple fact that you go to 1% to 6% inflation and there's going to be pockets of the banking, the world that will get hit quite hard?
I think the latter. What we're seeing is the parts of the economy that were levered, those sorts of business models are getting challenged now. I wouldn't call it a broad-based banking crisis because we saw earnings today. We've had earnings from UBS, Santander. We had the major U.S. banks reporting earnings over the last couple of weeks, and that still remains quite resilient. So I think it's more going to be pockets of distress in certain parts of the financial system, but not necessarily a massive banking crisis.
Do you worry more about Europe or the U.S.? Again, there's a couple of things. We talk a lot about U.S. commercial real estate in the U.S. and whether, if it's flagged enough, then you protect yourself.
I'd say in the short to medium term, I'm more concerned about the outlook in the U.S., not only just because of what we're seeing with the regional banks. As you mentioned, commercial real estate becomes an issue. Into the summer months, we'll be talking about the debt ceiling. So there's probably more potential headwinds in the near term in the U.S. than in Europe.
What else makes you nervous out there? I guess when you look at the things that are flagged, it's easier to take a position on them or unwind some of the positions that you've taken. Is there something else that could come, as a real difficulty? I don't know whether you look at geopolitics and you try and model what the various scenarios look like.
So we've been discussing this in the show for a number of years, Francine. The fact that this decoupling between US and China is a much more longer-term structural trend. I think that geopolitical aspect and the tensions ramping up over the last few months is something that definitely bears watching. Beyond just US, Europe, China, what's going on both from a trade perspective but from a military perspective, when we broaden it out to emerging markets, I think there are pockets of concern in some of the distressed sovereign credits. We're not saying we'll see a broad-based EM crisis, but definitely in the high-yield part with some of those single B credits, if financial conditions should tighten, continue tightening in the months ahead, they might actually be in for a pretty tough few months.
So these are specific countries, I guess, that you worry about, also maybe because of the lack of structural reforms.
Lack of structural reforms, high external debt, and financing needs are ramping up over the next few months. So between 2023, 2024, I think you'll start to see a lot of maturities coming through. And so far, when you look across the high-yield space in places like sub-Saharan Africa, not a single creditor has been able to come to markets over the last year or so. So access to markets still remains quite limited.
Diana, overall, I don't know how you deal with the U.S. debt ceiling, whether there is now, and we spoke to Mark Mobius, and he says, look, we've been here before. It's always been dealt with, even if we have a rocky couple of days. Is the U.S. political system different this time?
I don't think it's different. I think it is going to be quite volatile, and I see it more as a volatility event. where the sequencing does matter. You can look through the vol and say, ultimately, the politicians will find a resolution. But between now and then, we have a few months where political headlines and headlines around the debt ceiling will definitely inject some volatility into markets.
What does that volatility look like? Or, is it treasuries all over the place, or is there other parts of the markets that we should brace ourselves for?
I think predominantly the treasury market, we're already seeing some of that being priced in the very front end in the US build markets, where the inversion in the front end T-bills is quite telling that markets are assigning a little bit of premium going forward. We've seen the cost of insuring US debt, the CDS, actually rise. So again, I think it's going to be fairly contained to the US, but as we come closer to the deadline, you might see contagion spilling over to other parts of the market.
Diana, what happens to dollar in this kind of environment?
So dollar is caught between a rock and a hard place. I think when you look at the broad dollar, you may actually see it more range bound. But what's interesting is the dispersion that we're likely to see in the components of that basket. So I think the safe haven currencies such as the euro, which is actually outperforming the dollar the last few days, might actually look relatively more attractive than the dollar. For more risk proxy currencies, I think it's less clear-cut that they benefit from this.
Diana, thank you so much for joining us. As always, Diana Moha there, Kirkwald, Chief Investment Officer of Long Biased Strategies. Now, coming up, we'll get your stocks on the move, including luxury giant LVMH, which has hit a milestone of 500 billion euros market cap. But that story is up next, and this is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. Even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get your stocks on the move with Joe Easton from our equities team. Joe, we have good stocks, we have so-so stocks, but one that's actually flying literally off the shelves, LVMH.
That's right, Fran. So LVMH did really well yesterday, pushed its market cap up above $500 billion. It was the first European company to achieve that feat. And that was largely due to yesterday's move in the euro, but also generally the company doing so well in terms of their Chinese sales, selling lots of fancy handbags, also over in the US doing pretty well as well. We're losing some of those gains today, down around 1.1% as we see on the screen here over in Paris. But the big thing coming up is we've got Gucci after the close of trading today. Kering, the parent company, will be reporting earnings based in Paris as well. And that could be the next driver for that stock. In terms of what else we're looking at, we've also got AB Foods. Now, for me, this is the big surprise of the day. That stock dropping, as we see, 6.4% in London. That's the worst performer on the FTSE 100. And reading into this statement, it's quite surprising. They're warning of people potentially cutting back on clothing, even in the lower end of the market. Primark is expected to be a bit more resilient, given it is priced at a lower price point, and therefore less likely to be hit during a recession. But this is really kind of hitting that trade today, and that's the worst performer in London. Also, we're looking at Nestle. Now, the big trade in terms of the defensive place to put your money, where's that going to be? Well, looks like it's in Kit Kats and pet food. So Nestle today reporting really strong sales in both of those components, both in Europe and the US, a little bit softer in Asia. Coffee is actually slightly weak. Nespresso, George Clooney's favourite, that one not doing so well. But nonetheless, Nestle's margins are holding up pretty strong. That one's up 1.7%, one of the best performers on the staple goods sector in Europe today.
Who's not drinking enough espressos? I want to know, Joe. I
Definitely
also
not
have me neither. I'm doing my fair share. I have a funny George Clooney story on espressos, but maybe that's for another time. Joe, thank you so much. As always, Joe Easton there with your stocks on the move. Overall, a couple of stories that we need to watch out for. So stocks are falling. U.S. futures also falling. If you look at the earnings, they keep on rolling in. Now, we look at the Swiss bank UBS dragging banks lower after results fell short of analyst expectations. Banco Santander also sliding as concerns over outflows outweigh the first quarter earnings beat. We have Swiss food producer Nestle still up, as Joe was saying. And then one story that actually we know, everybody knows that it's something that's close to our hearts, but Italy standing out to Moody's investors as the only country it covers that's at risk of losing its investment grade rating. That's according to the company. It said it just this morning, so we look at some of the premium risk maybe and the spread between Italy and Germany, a 10-year yield that so far has been stable, but for how long? Coming up, we'll bring you more of our exclusive interview with the Santander Chief Financial Officer. He's Jose Garcia Cantera. That interview up next, and this is Bloomberg. So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation. Those are things that, you know, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, UBS has pulled in $28 billion from wealthy clients in the months leading up to its takeover of Credit Suisse. It's a bright spot for UBS, which missed profit estimates for the first quarter. Shares trading lower this morning, and we spoke to the chief executive officer earlier.
At times of distress in the market, generally the first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different sources. And in that sense, we are very pleased that, particularly also after the announcement of the transaction, of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
Sedran Motti also saying he's confident that some past clients will return. In conversation with our Manus Krani, who joins us now from Zurich. Manus, we're off the day's lows. The share price is down now sub 3.5%. Why are they lower?
I would say it's probably down to this sort of slightly flat outlook on net interest income within the wealth management division, which is the largest, you know, the sort of the workout at the gym, the musculature of wealth management within UBS. Net interest income rose by 31%, but it's about the outlook going forward on lending and net interest income. I mean, what I would say, Francine, there's a lot of punting going on about why is it down 5%? Was it because of the lack of inflows from Credit Suisse and not a more defined aspect to that? You're right, $28 billion came in, $7 billion in the last 10 days of March after the deal closed. Look, I think the bottom line is maybe there was a hope for some stronger language around the buyback and the guidance. Two areas of guidance where I pushed to Motti and got steady answers, which was, will you integrate it in 3 to 4 years? Is that a low bar? After the interview, he said, look, Manus, you know, people, when they put these big deals together, they take 2 months to put it together. They did this deal in 2 to 3 days or 5 days, depending on who you talk to. So they've got an awful lot of work to do post-mortem, not pre. That is the issue, Francine. A pause on the buyback, but it's not cancelled. And in terms of the other narratives that come through, I think there was just a hope for a little bit more robust guidance. And it's too early. This guy has sat into the chair as of the AGM that we were in Basel just over a couple of weeks ago, 2-3 weeks ago. So in terms of the ability to give material guidance on integration, on downsizing the bank, there are hints in that interview, but you have to go back and listen. Shameless darned plug. But it's 12 minutes of good listening. He loves the deal. Of course he does. And in terms of the flow show, don't forget, American banking was in a state of turmoil. So they got inflows from the US as well. I think there's a bit of disappointment that the flow show didn't say more about we got a gusher in from Credit Suisse. That was not the narrative.
It is a brilliant 12 minutes. Manas.
Take our time to make decisions based on facts and not based on emotions. And I'm sure it's going to be a good transactions.
Not to me.
So there you go. That's Armati. I think really sort of trying to sort of pull back the expectations. It is facts, not emotions, which will drive his decision in terms of how to reshape the investment bank, the time frame to do that, being conscious of the political nuances and the social nuances of Swiss society. It was quite interesting when I sort of said to him, look, yourself and Axel Weber, who you know well, Francine, you know them both very well, they've wargamed this. UBS have wargame taking out Credit Suisse on a number of occasions in the past. It's what you should do. You should be prepared for that Damascene moment. So there was a glint in his eye when we talked about that. But as he said to me, Manis, I will benchmark this as a success. Quite interesting. Emotion over finance. And that speaks solidly to his Swiss roots and to his gratitude and his humility to this country. That's what came through at the end.
Yeah, and Manis, it's incredible when you speak to, so many analysts, they said, look, this is the deal of the century, but it's going to be painful. And also the chairman has said so himself, this is going to be painful to execute. You're running a bank, you're running a very large bank, you have to keep clients happy, whilst at the same time integrating Credit Suisse and deciding who to let go. So what did we learn about the Credit Suisse deal?
In terms of that process, again, going back to the chairman's comment at the AGM and beyond, 3 to 4 years is the integration timeline that's been put out there. Personally, having seen him in action before, downsize UBS, recreate the definition of what wealth management is and what the investment bank is to wealth management, that takes quite a long time. Typically in these processes, we will get big, high, blockbuster headline numbers when they come through with the strategy in terms of the number of jobs to go. However, here in Switzerland, the political and social angst is such, and he touched on this, a great deal of demographics will play into what happens with the Swiss Universal Bank and the Swiss business. People are getting older. There will be natural attrition, and to a large extent, that will help him on the journey, the painful journey of downsizing two gargantuan pieces of Swiss society, Swiss industry, and the fabric of this country. So that's going to be part of the story, which is attrition rather than a scythe that cuts through it. He's very, very aware of his social responsibility to Switzerland.
Manis, thank you so much. Our Manis Crani, they're outside, of course, UBS headquarters with a fantastic interview with Sergio Armati. Coming up, new data shows Britons flocking to discount grocers as food inflation remains stubbornly high. We'll have the details next, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
moment news breaks. No one covers the world like Bloomberg.
It would be, of course, a total disaster for Emmanuel Macron because he's been elected on this reform and he would have to basically start from scratch.
It definitely is an exciting day for Apple. First store in India, here in downtown Mumbai, a second one coming up in Delhi.
TK, we've got a lot to talk about.
Debt, China, and the shockingly cautious view the IMF has on the view 5 years forward.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, discount grocers are winning over more British shoppers as double-digit food price inflation cuts into household budgets. According to market research group Kantar, annual shop price inflation dipped slightly to just over 17% in the last 4-week period. Now, for more, let's bring in Bloomberg's UK correspondent, Lizzie Burden. Lizzie, it dipped, 17%. This is horrific. Break it down for us.
Yeah, it's the 10th month in a row that it's still in double digits, but yeah, it's kind of good news that it's dropping a bit. If you break it down, you can see that what's really rising are milk, eggs, cheese, the stuff that everybody has to buy. So that's painful for the poorest consumers. And you can see that what they're doing is going to own brand lines. Those sales went up 46% year on year. But you have to ask, where do they go from there when everything's inflating? And then if you look at what it means for the Bank of England, the Deputy Governor, Dave Ramsden, gave an interview to The Times on Friday. He said that he's especially concerned about food price inflation. He actually thinks that the risks of inflation outweigh the risks of over-tightening even at this point. And you've got traders almost fully pricing a 5% peak for rates right now. But when I speak to economists, they say one of the reasons that they keep on underestimating inflation is because of the gap between CPI and PPI, and it's changed from previous crises, and they suggest that that's because companies are price gouging on food, hence why perhaps you can see why policymakers continue to resort to this blunt tool of rate rises to control inflation.
What about public finances?
So we got the latest data from the Office for National Statistics at 7 a.m. They showed that the UK's Treasury ended the most recent fiscal year with a deficit £13.2 billion below the official forecast. That's despite the huge energy subsidies, it's despite the big spike in interest costs that you've seen. And interestingly, there was a note from KPMG saying that even though everywhere is having these problems, they estimate that a quarter of the rise in gilt yields over the past year is specifically because of UK-specific problems. But the reason for this deficit is because you've had buoyant tax revenues in the UK. We know that the tax burden here is the highest in the Second World War, the period since then, at a time when the economy isn't growing. So you're going to have a long line of Conservatives at the Chancellor's door asking him to spend this headroom on giveaways before the next election, especially when you had S&P on Friday upgrading its outlook for the UK. They'll say, look, things look rosy. We're well past the Liz Truss era here.
Lizzie, thanks so much. Lizzie Burden there with the very latest on the UK. Now let's get straight to the Bloomberg First Word News with Leanne Gerrans. Hi, Leanne.
Hi, Francine. China's looking to distance itself from remarks by its French envoy who questioned the independence of former Soviet states. The Chinese embassy in Paris says the comments by Liu Xie were a personal point of view. A foreign ministry spokesperson added that Beijing respects the status of ex-Soviet republics as sovereign countries. Now, the US says Sudan's two warring factions have agreed to a 3-day humanitarian ceasefire. Foreign governments have accelerated efforts to repatriate staff, with the UK Prime Minister Rishi Sunak saying the large-scale evacuation of British passport holders will take place on RAF flights. Now, shares in Fox closed down almost 3% after the company said it's parting ways with Tucker Carlson, its most popular primetime TV host. His departure comes after the network's $787 million settlement with Dominion Voting Systems. Fox will employ a series of rotating hosts in Carlson's 8 p.m. slot until a successor is named. Meanwhile, CNN anchor Don Lemon says he's been fired from the network. Lemon was previously taken off air for comments about Republican presidential candidate Nikki Haley. The UK government is set to unveil new legislation that could lead to a crackdown on Silicon Valley. But tech firms such as Google and Meta platforms face more oversight and fines of up to 10% of global sales for practices that do hurt consumers. The legislation adds a new digital markets unit within the UK's antitrust regulator. First Republic Bank plunged in US late trading after quarterly earnings reignited investor concerns about prospects for its business. Results included a worse-than-expected drop in deposits, tumbling more than 40%. First Republic says it will cut as much as a quarter of its workforce, lower outstanding loan balances, and curb other non-essential activities. The president of the Confederation of British Industry says the lobby group may not survive a scandal triggered by multiple allegations of sexual assault and harassment among staff. In an open letter to members, Brian McBride said he hoped the CBI, the UK's biggest business group, could return as a reformed organisation, quote, whether or not that is actually possible. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, Santander shares are lower this morning as a drop in earnings from Brazil and deposit outflows from Spain troubled investors. Now, that's despite tailwinds from rate hikes that actually helped the bank turn in its best results since 2009. Well, we spoke exclusively to the Chief Financial Officer, Jose Garcia Cantera.
We've grown 9 million customers in the last 12 months, and we have increased volumes and both in loans and deposits. So obviously higher rates, particularly in Europe, is a good tailwind, but I think our model is working very, very well. We are adding customers, and that is, good for profitability. We grew revenue at double digits with net interest income growing 15%. And our efficiency ratio was 44%, so a very strong set of numbers.
Well, that was Jose Garcia Cantera, the Santander Chief Financial Officer, speaking to us exclusively a bit earlier. Now, coming up, there might be trouble for Dubai's once coveted expats. We discuss the latest on the Emirates luxury housing boom with the Minister for the Economy, Abdullah bin Tuq Al Mari. That interview is next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg UK, your source for news and analysis coverage challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, a new influx of wealthy Russians, bankers, and crypto millionaires to Dubai is pushing up rental prices in an already expensive city. Now, that's pricing out expats and raising questions about how the city will stay competitive. I'm very pleased to welcome the UAE Minister for the Economy, Abdullah bin Tuq Al Mari. Minister, thank you so much for joining us. Now, your growth rate is also the stuff of envy of many economies around the world, but how do you manage the influx of people in trying to also remain, I guess, affordable and attractive for expats?
So the UAE has always been a place where looks for the region and scale-up nation, where people look at the UAE to scale up their businesses, their trade, and the UAE has always been a trade hub for the last couple of decades. Yeah. I think the important aspect today in our economy, we are expected to grow to 7.6% in our GDP last year. The World Bank and international organizations are reckoning that we're going to grow about from 3 to 4%. This year, we are one of the fastest economy of recovery after the pandemic. And as well, we're looking at as well a lot of structural reform in our policies and regulations in the economy to allow to reduce a lot of red tapes and a lot of challenges in opening businesses. One of which is the important one was the 100% company law that we amended back in 2020. Today we have 275,000 new business licenses,
which is incredible,
which is huge.
Minister, do you feel sometimes like you're walking on a tightrope? So you have the corporate tax, which is coming in July, which is 9%. I want to ask you about that. But you're growing at 7%, and you're also needing to basically adjust it or making tweaks to make sure that people still want to leave there comfortably. What's your biggest challenge?
So the corporate taxes really actually will add up to the economy, because at the end of the day, it's corporate tax on profits.
Yeah.
So if a company is really doing profit and the economy is growing, there's where 9% will be. And 9% actually is one of the lowest corporate tax in the world. And I think this will actually, the movement of companies and the expansion of companies doesn't really depend on the corporate tax, because if you're doing profit and businesses, the growth actually expands.
Minister, who does it touch? So I know there's been a bit of a backlash from certain Emiratis. Are there people that will be exempt from the corporate tax?
Yes. Now the bylaws and the bar regulations are coming out. They're going to be coming out from now to the next couple of months. More details of it will actually be explained. There are some now which is exempted, such as the government entities, for instance, are exempted. There are a couple of other as well stakeholders are exempted, and more details are going to come up in the next couple. So the UAE, when they adopted the corporate tax, they're going to adopt. We're going to adopt the corporate tax on a high standard, a global standard as well. We're not going to reinvent something new, and I think this is something which want to assure the private sector, want to assure the companies in the world that the UAE will not bring something which is not out of the norm.
Does an income tax come next?
Well, that's income tax not on the table at the moment. But what we are at the moment looking at is the corporate tax and how we're actually going to implement it.
Minister, I mean, the other big question is, of course, when will the UAE leave the FTF's grey list that you've been adding over a year? And you've so far, this is about dirty money, and so far you've said, look, we've done all of this to make sure that we're compliant to some of these standards. What's the biggest tackle ahead?
So the UAE has been on the grey list for the last couple of years. We had 58 action items. And to tell that we have reduced that to 15 action items. Okay. Now, the FATF has put the UAE on an agenda plan where we need to, action plan to actually reduce these action items. We have been submitting our reports quarterly. We've been assessed quarterly. The last submission of our report was back in March. We're going to be assessed again in May. The last one before that was actually in November. And we were assessed in January. So there is an action plan for the UAE, submission, evidence-based, reporting, and more to take down the 15 action items that's left.
Minister, when do you think you'll get out of it? This year, next year?
Well, this is a question to the FATF, right? They have a process of going through. We can't expedite the FATF process, but what we can do is providing our reports and evidences.
What do you think is the major thing to tackle, actually, to get off that list?
Well, the effectiveness of the implementation. So the UAE really shows as well in any reports you read for the FATF that the UAE have come a long way. We provided a lot of our policies, our regulations, but effectiveness means that you need to enforce fines and so forth, but that will only come during time. So we are showing there's a lot of fines coming out. There's a lot of implementation and effectiveness of the items, and these are the things that needs a little bit of time to really encompass and shows that the world that the UAE is effective in actually implementing these processes.
Minister, when we look at the Gulf states, certainly the UAE is the most diversified Gulf economy. What are the benefits of each business model? Like, how would you describe the UAE's benefits in the next 5 to 10 years?
So the UAE looks at its models differently. 50 years ago, we built our seaports. 20, 30 years ago, we focused on airports. Today, the UAE is a brain port where we attract and we modernized our attractive of talent, where we and improved our quality of life in the UAE. It's the #1 destination for the Arab region. To really Arab youth to actually to look at the UAE as a destination for employment and growth. That's where we see the aspects of the UAE in many ways. So what keeps us as well, our UAE's leadership that's really closer to the nation, closer to the people, and really focuses on the models of the economy and how we can grow.
And Minister, what kind of discussions are you having with the government, for example, about COP28? What will be the fruitfall for that?
So the COP28 is the second time in the MENA region. The UAE invested in the climate change for the last 2 decades. And I think the importance at the moment as well, how the UAE can really bring the global leaders together to really emphasize the importance of decarbonizing economies, moving into more green transitions, and moving as well, and creating as well opportunities out of it.
Minister, thank you so much for your time today. That was, of course, the UAE Minister of the Economy, Abdullah bin Touk Al Mari. Now, we'll have plenty more, of course, throughout the day, not only on markets, but certainly looking specifically at some of the banks. Now, we had a great interview with the UBS Chief Executive Officer, UBS actually dropping in terms of share price after some of the wealth clients have been a lot more cautious as it embarks on the complex task of integrating Credit Suisse. That overshadowed $28 billion in new money from rich clients during the quarter. So we'll have plenty more on the banks. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller in New York, Anna Edwards in London, and this is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
The Bank of Japan holds its first monetary policy meeting under new leadership. Will they put the brakes on the recent stimulus boom, or is it full steam ahead with the BOJ's yield curve control? Bloomberg TV has full coverage of the meeting and analysis of what it means for the market.
Our BOJ team in Tokyo has learned the latest findings of what we can expect.
Policy normalization has to start at some point.
I would like to do my best to reach the target within 5 years.
It all happens April 28th on Bloomberg.
This is Bloomberg.
We believe we're still in a bear market, a mixed market. We think we've seen the worst of it.
Overall, we have a situation where European equity markets have outperformed the U.S. equity markets for the first time in a long time.
Now we're getting into the world where, okay, we're getting close to peak in Fed hiking cycle. We potentially, we're very likely going into recession. So let's look at companies, which companies can defend their margins better, can sustain some profitability or see less earnings decline. So it's really about earnings.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. A bright spot for UBS in an otherwise lackluster earnings report. The bank attracted $28 billion from wealthy clients in the months running up to and just after its takeover of Credit Suisse. Shares of First Republic are plunging today. Customer deposits at the beleaguered regional bank plummeted 41% in the first quarter. And big tech takes the spotlight today. We will get quarterly reports from Alphabet and Microsoft. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And as we heard at the top of the program, it is really about earnings, Matt. And they haven't all been dire, but still, European stocks trade higher, trade lower, and U.S. futures point downwards.
Yeah, U.S. futures pointing down, although we continue to kind of ratchet up our levels on the S&P and the cash trade. So yesterday, for example, we were up just less than 0.1%, so we closed at 41.37 on the cash trade. Futures taking a little bit of that away. Now we're looking at futures drop of almost 0.6%, and investors are buying bonds. So pushing that yield down by more than 4 basis points. We're now trading at about 3.45 right now on the 10-year yield as investors look to seek a little bit of safety. We have oil creeping ever higher here. There are problems with supply out of Iraq, problems with supply out of Sudan, and that's offsetting the concerns about demand, which hasn't really showed up in the reopening of China. So oil steadily climbing back up towards $80 a barrel right now. NYMEX crude at 78.81. And then Bitcoin, it looks like a little bit more profit taking there. $27,412 is the level right now, so well under 28. In terms of what's happened in Asia overnight, If you look at the broader MSCI Asia Pacific Index, we had a drop there of about 0.6%, a bigger drop in Hong Kong, about 1.7%, but the Nikkei bucking the trend and also eking out some gains of about 0.1%. The US dollar, a little bit of weakness against the yen, but I stress a little bit, not a lot of movement there. At 134, it's basically at the exact same level it was when we looked at it yesterday, Anna. So you've got weakness in Europe.
Yeah, weakness in Europe, not a great deal in some markets, but actually quite divergent. More than 1% weaker on the IBEX, financials weighing down there, and the FTSE MIB over in Italy down by just over 1%. Losses of around 0.2% in Germany, in London as well on the FTSE 100. So a mixed picture across European markets, but everything, it seems, all of the geographies at least, are under pressure today. And not all of the earnings reports were bad, as I mentioned. In particular, if you're in food, beverage and tobacco, in healthcare, we had some better earnings reports there. More on that in a moment. Rio Tinto, though, this is I put this one in as an example of what we're seeing on the basic resource sector. This is an area where we are seeing weakness, and it's not an earnings story. Iron ore prices down for the 5th day in a row. Have some of the mills in China overstocked in the run-up to the Golden Week holiday? Seems to be one of the questions people are asking as we look at maybe lackluster demand for iron ore over in Germany, over in China, sorry. So that's weighing on the mining sector, which again then weighs on London. The UBS share price down by 2.6%. We mentioned in the headlines the way that they managed to attract some money from Credit Suisse and some money from elsewhere when it comes to the flow into wealth management. They disappointed on the bottom line, a big provision for litigation costs that go back, way back to the GFC, but that stock's down by 2.75%. We are live in Zurich, of course. We'll bring you more on that story with Manus Cranio in a moment. Banco Santander over in Spain, weighing on the whole Spanish sector, a concern perhaps around the Spanish business, also the Brazilian business. That detracted from the fact that the numbers actually looking backwards, beat estimates, the higher interest rate environment certainly managing to take the business higher there ahead of estimates, and also they confirmed their guidance for in terms of return on tangible equity. And Nestle, this is a good earnings story this morning there, Matt, up by 1.5%. Overall, they managed to lift their prices, and sales unexpectedly for the whole business actually increased. Where are they in particular seeing pricing power? Apparently it has to do with pets. So if you have pets, apparently you don't really care what you spend on them, and that seems to help the bottom line over at Nestle.
That is very interesting. I mean, I think of them as, well, first and foremost, as a maker of Crunch, and secondly, you know, powdered and liquid beverages, Kit Kats as well. But for me, you know, Nestle Crunch is the OG. But it's really the beverage section where I thought they made the lion's share of their revenue. So interesting that they're pulling in the most profit from pets. Let's get back to banking, though, because we've got a lot of bank stories across Europe and here in the U.S. as well. In terms of UBS, that's where the focus, the most focus is. They pulled in $28 billion from wealthy clients in the months leading up to the takeover of Credit Suisse. It shouldn't have been difficult, right, as people were dumping money out of Credit Suisse by the bucket load. It's been a bright spot for UBS, though, in a quarter where it missed estimates and had the lowest profit in 3 years. Bloomberg's Manus Cranio spoke to the CEO, Sergio Ermotti, earlier.
At times of distress in the market, generally the first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different sources. And in that sense, we are very pleased that, particularly also after the announcement of the transaction of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
Manus Cranio joins us now from Zurich. So, Manus, what was your key takeaway from UBS's earnings?
Matt, I like what you sort of said. It should have been an easy drop, shouldn't it? The 69 billion that walked out of Credit Suisse should have jumped on a tram, come up Bahnhofstrasse, and dropped into UBS. Bottom line is, I think the reason why you saw the stock tank by 5% this morning is they've got the same affliction as everybody else, going to cash, going to money markets. But here's the beat. $28 billion came in, $7 billion came in the last 10 days after the deal closed with Credit Suisse. Should have been more, should have been me. That's what's going through my head, that is the rationale of the market. They pushed back at attributing any massive influx from Credit Suisse, and Ermotti said it shows there's healthy competition on the street. It pushes back against this global narrative that it's too big, it's a monolith, and it's going to dominate everything. That sort of works in terms of pushing back. It demonstrates there's competition, and that fear of concentration is off the table. But I think when you look under the hood, Anna, it is about that sheer issue for everybody. Going to money market funds, outlook for lending, maybe a little bit muted. So I think it's a cocktail of reasons, and a lot of people just sticking their finger in the air and going, I don't really know why it's down 5%, but I'll go with this.
Right, yeah, that's sometimes part of it, isn't it, Manus? In terms of that combination then with Credit Suisse, what did we learn about that, around the timing, around the challenges ahead?
A very clear message. Q2, it closes. The regulators are on board. The PRA are there. The Fed are there. The Swiss approvals are coming. Very hesitant to say that there'll be any major obstacle. But of course, when it comes to matters of grave importance, is it emotion or fact that drives the bus? Take a listen.
The only thing I can say is that we will take our time to make decisions based on facts and not based on emotions. And I'm sure it's going to be a good transactions.
And he did go on to sound a slight sense of frustration with some of those good buddies out on the street here who sort of say they're going to have to sell part of the Swiss Universal Bank at Credit Suisse. They're going to have to IPO that. They're going to have to assuage society. He said there's a lot of new sort of gurus on how to run Swiss banking. He has a blueprint. It's called UBS. He spent 9 years putting it together. I think where the market is slightly disappointed, Anna and Matt, is that there just wasn't more of a robust, yeah, we'll get it done in less than 4 years. That's what the Germans said. Yes, Manus, buybacks will be on the trade well in advance of 2026. It wasn't. It was a very measured, a very steely, a very focused individual that I met this morning. Laser sharp focus on execution and taking their time. And there are jewels within the Credit Suisse crown that they do want to retain.
Right, and of course, as you point out, Sergio Armati has a track record. He's been there, he's done this, and it looks like he wants to do it again, or he's prepared to do it again. Manus Cranny, thank you very much for your reporting on the ground in Zurich. Now let's get to the U.S. Story. Smaller banks, regional banks, First Republic, falling in pre-market trading by a lot more than UBS, like 4 times more in percentage terms. The bank's quarterly results reignited investor concerns about the prospects for that particular business, with customer deposits plummeting 41% in the first 3 months of the year. And that doesn't even account, or it takes into account the additional $30 billion that JP Morgan & Co. Put in. President and CEO Mike Roffler spoke on the earnings call.
We are pursuing strategic options to expedite our progress while reinforcing our capital position. I also want to underscore the key aspects of our business that will remain unchanged. These include operating a simple and straightforward business model focused on delivering exceptional client service, working collaboratively to meet the banking and wealth management needs of our clients.
Bloomberg's Tom Metcalf joins us now for more. And Tom, you know, the 41% deposit drop, that includes the $30 billion that Jamie Dimon and Brian Moynihan and other banks big banks put in there. If you take out that $30 billion, it's more like a 60% drop in deposits.
Yeah, no, exactly. And I think for me, that's the staggering statistic here, right? Like, they went from about 170 billion right the way down to 100 billion. And of course, in that time, you had 30 billion coming in from various banks. So, you know, that is what the market's really seizing on. You can see the shares down 22%, I think is the latest. And that is what people are worried about, because as we've seen with other banks, you know, once you start losing deposits, it, you know, really just sort of feeds on itself.
Yeah, a whole new conversation in the digital world, isn't it, Tom, about the speed at which deposits can go out the door. So where does this leave First Republic? Where does it go from here?
Well, yeah, exactly. There's a lot of talk. Has this sort of reignited those investor fears? You know, will there be more concern about its sort of future as an independent bank? I mean, what I thought was interesting, we just heard from the earnings call, the executives did not take questions. So they just basically read out a statement, and then, you know, I think it was all wrapped up within 15 minutes. So, you know, I think what these results have done is just ladle on more questions, and it doesn't seem executives are willing to answer them yet.
All right, Tom, thanks very much for that coverage. Yeah, I think it was interesting that they held just a 15-minute conference call and then took no Q&A, which is terribly unusual in an earnings call, even for First Republic. So there look like there are endemic problems there. Let's get to the big story across America yesterday. Fox News is parting ways with Tucker Carlson, its most popular primetime host, who is also the source of repeated controversies over his statements on everything from election fairness to race to LGBT rights. Let's get to Bloomberg's Bruce Einhorn for more. Bruce, what do we know right now about the firing of this host who, regardless of your thoughts on his politics, he brought in 3.3 million viewers a night?
Yes, he had the most popular show on cable TV in prime time other than sports. As far as the reasons for the departure, we don't really have very much. We have the announcement on Fox News that they had parted ways. Beyond that, there's nothing else from Fox explaining why. No comments from Carlson at the moment. Of course, this does come less than a week after Fox agreed to settle the defamation case brought by Dominion Voting Systems for $787.5 million. As part of the discovery in that case, evidence came out of Carlson making insulting comments about others at Fox News. Carlson is also subject to a lawsuit brought by a former Fox News producer who's alleged a culture of misogyny and a hostile workplace at Fox. Whether any of those things had something to do with his role, we're not sure. We do know, according to a person familiar, that Lachlan Murdoch, the CEO of Fox Corp, and Suzanne Scott, the CEO of Fox News, made the decision on Friday to get rid of Carlson, and he got the news, and there was no further show for him on Monday.
Yeah. So what's the impact on Fox then in terms of this latest announcement? And given his influence, could this affect the 2024 election, or at least change the role that Fox News plays in it?
Well, we did see an immediate reaction from investors. At one point, the stock price was down more than 5%. It did recover, but it was still down about 3% for the day, an indication that investors may be concerned that without Carlson, Fox will struggle to keep some of its audience. Carlson, very influential in Republican politics, just recently had an interview with former President Trump. So it's unclear where he'll be going next. If he does go to a rival network, that could peel viewers away from Fox. On the other hand, keep in mind that Fox News has lost high-profile people in the past, most notably Bill O'Reilly years ago, and has remained as influential as ever. So whether the same thing would happen again with Tucker Carlson's departure, we will have to see.
Bruce, thanks very much. Thanks for the update, Bloomberg's Bruce Einhorn, on the way that media story plays in to politics. Coming up on the program, we'll get back to the markets, and Catherine Peterson, BlackRock Investment Institute senior investment strategist, joins us. What's the emerging market strategy? How much slowdown in the United States can EM assets tolerate? We'll also talk banks. It's been a really busy day for European bank earnings. Filippo Alouati joins us, Federated Hermes head of financials for credit, as European bank earnings rolled in this morning. Lots to digest then with him. Earlier on Bloomberg, we heard from Santander CFO following the bank's results. He shared this outlook.
We've grown 9 million customers in the last 12 months, and we have increased volumes and both in loans and deposits. So obviously higher rates, particularly in Europe, is a good tailwind. But I think our model is working very, very well. We are adding customers, and that is, good for profitability. We grew revenue at double digits, with net interest income growing 15%, and our efficiency ratio was 44%. So a very strong set of numbers.
we're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
The Bank of Japan holds its first monetary policy meeting under new leadership. Will they put the brakes on the recent stimulus boom, or is it full steam ahead with the BOJ's yield curve control? Bloomberg TV has full coverage of the meeting and analysis of what it means for the market.
Our BOJ team in Tokyo has learned the latest findings of what we can expect.
Policy normalization has to start at some point.
I would like to do my best to reach the target within 5 years.
It all happens April 28th on Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Anna Edwards over in London. Right now I want to talk about European stocks and where we are in terms of the gains that we've seen, how much further we could go. This chart lays out neatly the highest forecast, which we're approaching at about 480 on the Stock 600. We're well above the average forecast of 450, but with the ECB continuing to tighten policy and with the slowdown in growth that could affect, are we going to see European stocks climb any further? Joining us right now is our equities reporter, Michael Masika, out of London. So, Michael, what do you think? Is it possible for European stocks to climb further, or is it time for them to top out and roll over?
Well, according to the strategies that we see, Matt, this is not going to go very well for European stocks. This is like getting very toppy. Like you said, the highest forecast is 480, which is unusual in our survey. Usually the highest forecast is way higher than the current level. So we can tell that the optimism is definitely abating.
Optimism abates, and JP Morgan and Bank of America, I know that you quote talking about the risks that European stocks face after this incredible long rally up. We've seen that with luxury stocks, certainly with LVMH, for example, challenging for the #9 spot in terms of listed market cap. So there are some skeptical voices about whether this carries on. Do we go into a higher volatility environment around European stocks as a result?
Yes, exactly. I mean, you can see volatility has been quite contained over the past month, especially, surprisingly, after what happened with the banks in America and with Credit Suisse. But things could go slightly pear-shaped from here. I mean, volatility is set to rise, first of all, because some of the effects that we had over the past month are going to be fading, like the quantitative easing from the Fed after the bank failure. But also the Chinese reopening is already showing some sign of softening. European economic data is softening. The manufacturing data has been quite bad, and the rest, all the economic surprises in Europe are fading as well.
What about earnings, Michael? I mean, here we've seen earnings beat, but of course, actual profits are lower than they were in the same quarter last year. How's the European earnings season shaping up?
So pretty similar. I mean, the first few earnings that we had were okay, but you have to remember that analysts have cut forecasts dramatically ahead of the earnings season. So that makes the comparable very, very easy to beat. And so that's why we're having a lot of good surprises in Europe. And for a lot of strategists, this is probably the end of the earning beats. And from here, this is going to be much more difficult.
This is where Matt points out that he's never surprised when he sees the earning beats, because he's become used to it after many years at Bloomberg and tracking them on the Bloomberg terminal. Thank you very much, Michael. Thanks for bringing us to your conversation. Bloomberg's Michael Masika with the latest on equities, in particular in Europe versus the US. For more market analysis, check out MLIV Go. That's the function to use on the Bloomberg terminal to find the market's live blog. This is Bloomberg.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, keeping you up to date with news from around the world, here's the first word. In Sudan, the war sides battling for control of the North African nation have agreed to a ceasefire. The Sudanese army and the rival Rapid Support Forces are backing a 72-hour humanitarian truce. The army says it was brought about by U.S. and Saudi mediation. Chinese President Xi Jinping's efforts to portray his country as a peacemaker in the Ukraine war have been undermined. Now Beijing is trying to extinguish a firestorm caused by its ambassador to France, Liu She, questioned the independence of the former Soviet states, echoing Vladimir Putin's views. Beijing said that was a personal point of view and reaffirmed respect for the sovereignty of countries that were once part of the Soviet Union. Coming up, Ann-Katrin Peterson, BlackRock Investment Institute Senior Investment Strategist. This is Bloomberg.
add to my anxiety levels, which are already through the roof, I want to talk about the social consequences of this, because it seems like an environment where inflation is high, growth is slowing, the Fed is explicitly trying to boost unemployment. Like, it seems like that is probably the worst environment for, your average person on the street. And it almost seems like the Fed's goals here, they're almost anti-American at this point, or like anti the American dream, right? Like housing more expensive,
crushing the housing market,
crushing demand, crushing labor force. Like, what are going to be the social consequences of central banks, having to do this in order to put a cap on price increases?
They're going to be severe. We're already seeing, of course, a backlash against free market, backlash against trade and globalization, even a backlash against technology, a backlash against, laissez-faire policies, because there has been a massive increase in income and wealth inequality. This is leading to populism of the extreme right and or of extreme left in many countries across the world, and authoritarian regimes becoming more popular across the board. It's a repeat of the 30s, literally.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A bright spot for UBS in an otherwise lackluster earnings report. The bank attracted $28 billion from wealthy clients in the months running up to and just after its takeover of Credit Suisse. Shares of First Republic are plunging today. Customer deposits at the beleaguered regional bank plummeted 41% in the first quarter. And big tech takes the spotlight today. We will get quarterly reports from Alphabet and from Microsoft. I'm Anna Edwards in London with Matt Miller in New York, and it's earnings here. A focus on banks, financial services, Matt, for European equities, and indeed with the US news out of First Republic last night. But you're looking ahead to more earnings reports with a tech flavor to them a little later.
Yeah, we've got Microsoft and Alphabet coming out today. Speaking of flavor, we have Pepsi coming out in just a little bit as well. So there are a lot of big consumer companies yet to come out with earnings, as well as the mega tech, communication services, whatever you want to call it, those giant market cap companies that have just driven the market higher year to date. We are seeing a bit of a pullback in S&P futures right now, off about 0.5%, but we continue to steadily climb higher in terms of the cash trade. 41.37 was where the S&P closed at the end of trade yesterday. We do see investors buying bonds right now, maybe a sign that they're seeking some sort of safety as we get deeper into earnings, and then we don't really have big market moving eco data until the employment cost index comes out on Friday. Nonetheless, the yield coming down on the 10-year now to below 344 at 343.72. NYMEX crude has been slowly climbing up over the past couple of days. Yes, it's down 32 cents in the session today, but it's come back up closer to 80. Right now it's 78.44 on concerns about supply issues in Iraq and supply issues in Sudan. And those concerns have been outweighing the problem with demand that just hasn't appeared in China. So we're getting closer to 80, but coming off a little bit this morning. We could see that move throughout the day. And by the way, Javier Blas has an excellent big take on oil, on the U.S. shale push, where they can finally make money down there in the southwest of the United States of America. Bitcoin is off a little bit as investors take some profits, 27,328. In terms of pre-market movers, First Republic is obviously a huge one. You can see in the pre-market down by more than a fifth after it said that deposits shrank by $72 billion in the first quarter, even after Wall Street's largest lenders parked $30 billion with the regional bank to shore up its finances. So really, deposits shrank by $100 billion and change, almost 60%. But fortunately, some of the big Wall Street banks put their money in there for at least a few months. Also, in terms of M&A, we have a great story on Getty. An investment fund called Trillium has made an unsolicited proposal to buy Getty Images, although the firm has been pushing for a sale of Getty for a while. A sale at, I think, $12. They made an unsolicited offer at $10. I think to try and goose the owners of Getty Images, who are, for the most part, the Getty family, right? But very interesting that stock had bounced up close to the $10 offer and has now dropped down in the pre-market. So investors don't believe anything is going to get done there. And then finally, Range Resources reported adjusted earnings per share for the first quarter that was better than the average analyst estimate. And this is one of those energy companies that's rising in today's pre-market trade. Right now, up almost 5%, and we'll watch it at the open in just about 4 hours' time. Anna, what do you see going on in Europe?
Yeah, well, 2.5 hours into the trading day here in Europe, Matt, we see European stocks are down. On the upside, you've got food, beverage and tobacco and healthcare. We've seen some reassuring earnings stories coming out of those sectors, and those sectors not doing too bad. But at the other end, financial services and banks really under pressure. Also basic resources, 5 days of drops in the iron ore price, really putting the focus on China and the resilience there, or the extent to which the rebound is done, and we can see further rebound there post-COVID. So this is what we see overall, down by 0.5% on the stock 600 right now. This is the financial services pressure I mentioned. We've got UBS Group down by 2.5%. Yes, there were wealth management benefits from the demise of Credit Suisse in the sense that some of the flows came their way. Some seem disappointed, though, that UBS didn't get more of those flows, so that's part of the conversation. Or there's disappointments around the first quarter net profit line, where they had to take a big provision linked to litigation costs that go back right back to the great financial crisis. So the focus with a very long lens of history on UBS today, but that's where the share price is right now, this moment. Here's the bank sector going weaker. Banco Santander down by 3.8%. The stock under pressure on the back of disappointment around the Spanish business and the Brazilian business, even though overall the company managed to come in with numbers much better than expected. Higher interest rates clearly playing to their strengths there. And I should say the stock is off earlier lows. It was down by more than that earlier on. And Nestle, overall, they managed to please with what they reported today. They were able to put up prices, it seems, and actually sales went higher in a period where many people thought that sales would not go higher. But it seems that we still see a business here with pricing power, in particular around the pet food space, Matt, where they seem to be able to push up the prices of those pet foods.
Yeah, you can charge anything you want, right? People will pay anything for their pets. Let's get to more of a macro look right now, though, at markets, at least to start with Anne-Catherine Peterson over at BlackRock Investment Institute. She is a senior investment strategist. And just in terms of, where stocks are, Anne-Catherine, globally, and good morning, thank you for joining us.
Good morning.
We've been talking about what looks like a pretty toppy market in terms of the stock 600 in Europe. And of course, here in the US, we're trading at the tightest range this month that we've seen since 2017. So stocks doing a whole lot of nothing after gaining about 8% year to date. What do you think about developed markets?
Well, I think generally the past few months have shown that this remains a demanding environment for investors, also for equity investors. And this confirms our view that we do live in a more volatile macro and market regime. And concerning the equity market outlook, top of my mind currently, of course, is the earnings seasons as well as upcoming central bank meetings. And as a matter of fact, when turning to the US, the earnings expectations for this calendar year have been downgraded meaningfully. However, they do still look too rosy in light of slowing growth, in light of a recession foretold in the second half of this year. When digging deeper into consensus expectations, consensus is expecting a re-acceleration of earnings growth in the second half. And this may be tough in an environment where a recession hits. When looking into history of the S&P 500, earnings per share, for example, there hasn't been a time where earnings per share did not contract, even in an environment, and I know Anna talked about sales growth being relatively high, even in an environment of high inflation, hence high nominal GDP growth. So in that sense, equity markets do remain vulnerable to setbacks and to volatility as we head further into this year, in my view.
Yeah, so I mean, in terms of the S&P 500, last year we were looking at 200 $220, right? And we have seen sales growth so far this quarter to that point, 7.2%, but earnings contracted by 1.5% in the first quarter. What are you looking for this year, Anne-Catherine? Like ballpark figure, how much is the tightening cycle that we've seen and the slowdown in the economy going to take out of earnings for the S&P 500 this year?
I think that the earnings outlook and also generally the U.S. equity outlook, also in terms of valuation, does not yet reflect the economic damage that is inflicted upon the U.S. economy and U.S. earnings by the U.S. Federal Reserve tightening cycle. This is not yet priced. And unless we get to a situation where we think that this economic damage is priced, we keep a more cautious stance on U.S. equities for the time being. Now, in terms of numbers, the consensus growth for the calendar year is around 0, so a flat growth. I think this is still on the optimistic side for the full calendar year for the U.S. and actually also for Europe, where we do, their consensus expect modest positive earnings growth for the full calendar year 2023.
Anne-Catherine, good morning. Talking of the US and the earnings story there, I should focus perhaps on tech because we'll get the start of the tech earnings story really coming through today. Last time around, the focus was really on cost cutting and a focus on management that were really taking cost cutting seriously, and if an era of efficiency, I suppose, was much hailed. What do you think the focus will be this time around?
Well, this revamping of business model is generally helpful for the more medium-term earnings and growth outlook in the tech sector. However, what will be crucial again for the outlook in tech is the rate expectations. And currently, markets are pricing in swift rate cuts by the U.S. Fed for the second half of this year. We do not agree. We do not think that a pause in rate hikes in the U.S., which will be nearing, means a pivot in the U.S. Fed's policy stance. The Fed won't come to the rescue in light of still stubborn and still sticky inflation amid resilient labor markets. And as we all know, tech is a very interest rate sensitive sector. So the tech sector might have to digest this potential for a reversal in Fed rate hike expectations for the second half of this year.
Okay, so we'll watch expectations around the Fed then when it comes to the tech sector. What about emerging markets? Because, Anne-Catherine, a lot of people talk about opportunities in emerging markets. I wonder how resilient the EM narrative would be if we saw substantial slowdown in the US, or how resilient is EM with just a very shallow slowdown in the US?
That's an interesting point. Thanks, Anna, for that question. So we have actually upgraded our view on emerging market assets earlier this year. And one of the reasons for this upgrade is that emerging markets will benefit from China's powerful economic restart in the near term, which looks set to boost emerging market earnings, particularly in Asia, while Latin America continues to benefit from the demand for commodities. But there's other reasons why we do prefer emerging market equities over developed market equities right now. Apart from diverging earnings trends, it's a diverging central bank policy. Emerging markets have been started to hike rates about 1 year earlier than their developed market peers, and they are also look closer to pausing rates and perhaps cutting rates compared to the Fed and the ECB. And a third reason is the softer US dollar that we do foresee this year. All of these factors look likely to support emerging market assets, at least in the near term. So we have a tactical preference over the next 6 to 12 months.
Okay, really interesting on the EM story there. Anne-Catherine, thank you very much. Anne-Catherine Peterson of the BlackRock Investment Institute. Coming up on the programme, we've had a lot of bank and financial services reporting this morning here in Europe. We'll get to Filippo Alouati, Federated Hermes Head of Financials for Credit. He can talk us through his thinking this morning. This is Bloomberg.
the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
It's too early to talk about buyback. I think what is important is to say that we pause it and we haven't canceled it. So our intention, as soon as we have more visibility about all the numbers and our plans, we will have also a better view on our capital return strategy. At this time, we are reiterating our intention to have a progressive cash dividends increase every year. And we are definitely have an intention to resume share buyback when it's appropriate.
That was the UBS CEO Sergio Amotti speaking to Manus Cranny earlier on today for the first time since the deal with Credit Suisse was announced. Now, shares in UBS are following the, well, they're lower, in fact, this morning, down in European trade by 1.7%. In fact, the Swiss lender is warning that wealthy clients are turning increasingly risk-averse and reports its weakest quarterly profit in more than 3 years. For more, we're joined by Filippo Alouati, who is head of financials for credit at Federated Hermes. Filippo, nice to have you with us. Let's start our conversation then on UBS. So they've attracted wealth management money. That's the good side, and they continued, and they actually attracted some of that after the news that they were buying Credit Suisse. So that seems like a positive. But not all of the money that left Credit Suisse came over to UBS. Which for some is disappointing. How do you look at the wealth management numbers?
Yeah, I understand that's so the disappointment on the market with the outlook, because I mean, when people, especially the wealth management client or UBS, take on less risk, then of course that affects the P&L of the bank. Having said that, I think there is I think the results are a little bit of a sideshow. So I think the most important thing is, of course, is the integration of Credit Suisse. And I take comfort in the management. They say they expect also the legal merger to be completed by the end of Q2. And I think in terms of the deposit flow, because there is, as always, very focused in this moment on deposit flow, I think that we need to remember that UBS and Credit Suisse are two of the largest wealth management franchises in the world. So there is an element of overexposure of some of the clients. So yes, so they benefit UBS from some of the outflow from Credit Suisse, but at the same time, some of the UBS clients, they already had deposit with Credit Suisse, so they can't just hold twice the deposit at the combined groups. I think also there is a mechanical element of this to be taken into account.
Yeah, he kept talking a lot about the complementary nature of the deal, the way he likes the deal because of that, also the financials around it perhaps, but talking about how the two businesses are complementary in his view. What are the biggest challenges do you think then, Filippo? Because this is going to take, according to the chairman, 4 years to deliver.
Yes, I think the execution risk is still very big. I mean, we know that essentially there is no plan B, because that's what they will have to do and that. And I think also, in my opinion, so they will consume a lot of management times for the next 3 years. And there is complementarity. I think also they get in Credit Suisse for very little, if not zero. And I think also they have a very big buffer to absorb all these restructuring costs. But I think also the management time will be 100% focused on integrating the Credit Suisse business.
In terms of the shares, Filippo, UBS today is trading just a little more than it was at the beginning of the year, and just about the same level it was at the beginning of last year. Did they get a deal? Did they get a great deal on this Credit Suisse purchase? And if so, why aren't investors valuing them at a higher level?
Yeah, that's a good question, Matt, because I think also will take some time to, there is still some missing details, but I think over time, and time will only tell, I think also they will demonstrate actually they got quite a good deal, and I think it doesn't really happen very often that essentially you take the number 2 in many of your markets essentially for free.
In terms of other banks, we saw Santander out. There are concerns about deposits in Spain. The shares are down with those concerns, and Brazil as well, although it seems like there are other bright spots. What's your take on Santander and the Spanish banks?
Yeah, for Santander and the Spanish banks, I think the result today, they were a little bit of a mixed bag. I personally would have expected a bit more from emerging markets like Mexico, Chile, etc., just because of this emerging market narrative that we hear almost every day. I think on the deposit flow, there is a lot of nervousness in Europe as well in America for obvious reasons. But I think also we need to differentiate what are normal deposit flow and, for example, also the attempt from banks like Santander and other large European banks to increase their fee incomes, because the net interest income is increasing, but at the same time, so they're trying to sell more money market funds, short-term asset management product, and that's eventually will beneficial for the P&L of the bank or the group.
Are we going to see higher? One thing that won't benefit them is if there's a lot of pressure, either competitive or other pressure, to increase the rates that these banks pay on savings accounts. Are we going to see banks in Europe paying out higher rates? As interest rates rise, you would expect to see that, but you know, and they'll always say it's a very competitive environment, but people don't tend to switch bank accounts very often.
No, exactly, and I think also yes, also we'll see more pressure on that side. Then whether this competitive environment becomes a deposit war, I don't know. I'm not sure. Not at European level. Maybe in some markets, for example, where in the UK, where people are more financially savvy, to put it that way, then maybe the more competitive pressure. But I think it's good we remember that actually we're starting from a very low deposit beta system level, and also we still have all these large savings from COVID that will eventually leave the banking system. Well, actually won't leave the banking system. It will reappear into form of money market funds, of asset management products.
Okay, Filippo, thank you very much. Thanks for your time. Filippo Alawati of Federated Hermes. Coming up on the program, after years of big losses, Wall Street is about to make big money on US shale. We'll be discussing that in today's Big Take story. Javier Blas joins us. This is Bloomberg.
is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
While I like home runs and grand slams in baseball, at A-Rod Corp here, we shoot for singles and doubles, and we definitely never want to strike out.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back now. Shale fracking changed the world, but after years of losses, investors are looking to make a profit. Joining us now to discuss the latest big take story, Bloomberg's Javier Blas. Javier, great story, all about oil, all about the shale part of the oil universe in the United States. And this time around, you're seeing that investors are asking for profits, not just high volumes. What's the gist of the story?
Well, 10 years ago, or 15 years ago, when the shale revolution started in the United States, growth was what the industry wanted, and growth was what Wall Street wanted. That led to significant losses. Investors who put $1 15 years ago probably have recovered 50 cents on that dollar. Over the last 2 years, the whole story of the shale revolution has changed, and now is to maximize profits, dividends, buybacks, and that is coming at the cost of growth. Gone are the days where shale was growing at almost 2 million barrels a day. Now it's half of that rate, despite much higher prices.
Okay, Matt.
So are they making more money now, and are they going to be able to switch back to growth in the future?
I think that certainly they are making more money now. Shale has become a very profitable industry for Wall Street. The dividends are there. The buybacks are also there. Can the industry switch back to growth? No, I think that this is the new normal. I think that the wild animal that once was the shale revolution in the United States has been tamed. It doesn't mean that it's over, but we can see the beginning of the end of the shale revolution, of the shale boom, and certainly we can see coming in the horizon peak production for the United States.
And maybe consumers have to get used to higher prices, Javier. Is that the upshot?
It is that really the upshot. For consumers, shale was great news. It kept prices lower, gasoline prices lower. Consumers now need to expect much higher prices in the future.
Javier, thank you so much for joining us. Javier Blas with the latest on that Big Take story. NI Big Take is the function to use on the Bloomberg terminal. Also available, of course, on the Bloomberg website. That is it for early edition. Surveillance is ahead with Tom, John, and Lisa. They'll be talking to Paul Jacobson, the CFO of General Motors. Other guests also joining the team. They will also get you geared up for the earnings season from the tech space. We heard a little bit about the opportunities or not there from BlackRock earlier on, but that's going to be a focus in terms of the earnings story, as well as those numbers from Pepsi. This is Bloomberg.
What are the biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? The why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg.
Everything rolls back to the Fed and their super aggressive policy last year.
The Fed's conviction around bringing inflation down to 2% is very clear.
I've been thinking of a fun word to describe this is slowflation, slow growth, and inflation that's still going to be more stubborn than you would have liked.
The Fed will have to keep interest rates higher for longer in order to get inflation back to the 2% target and maintain it there.
Before the end of this year, we will be at a level that's pretty consistent with long-term inflation expectations that the Fed wants people to have.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. We start this morning with some breaking news. President Biden launching his re-election campaign. The president making a formal announcement for a second term. Get ready to hear this slogan on repeat. Quote, let's finish the job. The Biden team releasing a highly produced 3-minute long video. And here's the quote from the president this morning. The question we are facing is whether in the years ahead we have more freedom or less freedom. I know what I want the answer to be, and I think you do too, Tom. This is not a time to be complacent. The president goes on to say, that's why I'm running for re-election.
Elections are domestic, but there with the freedom or less freedom, it does allude to one of the foundational parts of any president's term, the surprise of foreign affairs. And to me, more freedom or less freedom speaks to his foreign treatment with the war in Ukraine.
He says there is still work to do to give Americans a, quote, fair shot, Lisa, and beat back extremists in the Republican Party who want to cut government spending and curb abortion rights. Do you get the feeling already early on that this is going to be a key feature of this campaign?
And it has been working very well in terms of getting turnout, in terms of galvanizing voter interest in this. I have to say how different this is than 3 or 4 years ago when he was launching his presidential campaign, and he was really a laggard in the whole race. People didn't barely pay attention to him until it seemed like he was the most plausible candidate to go against former President Trump. Here we are, just the only one really in the seat. I mean, there's nobody who's viable, who's contending against him. Yeah. Already the oldest person ever elected to U.S. president. And here we are. He is the main standard bearer for the Democratic Party.
560 days to the election, and along that way, particularly for our international audience, John, there's two elections here. There's the primary battle, the Republican primary battle. They're out of office. And as Lisa alludes to, will any Democrat stand up and run against an 82-year-old election day president? And I don't see evidence of that at this time. We'll talk to Anne-Marie Horton here later in the hour, and a wonderful guest coming up momentarily. But John, I really wonder how the Democrats coalesce around him, given so many in the primaries would be more to the left than Joe Biden.
He is 80. As Lisa indicated, he's already the oldest U.S. president ever. He would be 86 at the end of his second term. Tom, you and I were talking about the polls, the latest poll from NBC News. This one, 70% of all Americans, including 51% of Democrats, don't want Biden to run for president in 2024. That is the elephant in the room.
The elephant in the room, and it's very different. I have the clearest memories of a Sunday evening when Lyndon Baines Johnson said, "I'm not going to run." And that stunned the nation, John. This is in the middle of Vietnam. This is completely different. And as you say, there's a huge doubt about the age. I should also point the age of Mr. Trump is an issue as well.
And nearly half of those respondents in that poll, Tom, citing his age as a major reason for that. If you're just tuning in on TV and radio, some news coming in. As expected, we've been talking about this for a number of weeks now. As expected, the president launching his re-election bid, the president making a formal announcement for a second term. I've said this a few times. There is a quote in here that we've heard a few times over the last couple of weeks. This quote, you're going to hear it on repeat. Let's finish the job. Joining us now to discuss, Greg Valliere, Chief U.S. Policy Strategist at AGF Investments. Greg, let's finish the job. Your thoughts, your reaction to this one?
Well, two things. First of all, a lot of people don't like the way the job has been handled so far. So to continue a policy that voters aren't crazy about is, in my opinion, risky. Second point is, by having a tape, you avoid any chance of a gaffe, anything spontaneous that would perhaps come back against him. So that was, I think, a safe move to unveil it in this format.
Greg Valliere, those of us of a certain vintage, I put you in this group too, Mr. Valliere, saw the deterioration of, in all good ways, of Ronald Reagan into a second term and of George Bush Sr. We lived that. We didn't live Woodrow Wilson. Explain to me the wear and tear on Biden and where you perceive he will be physically and linked to the job, not at Election Day, but how about a summer day in 2026?
It's a terribly stressful job, as you know, and the fact that he could still be president at the age of 86, to me, is mind-boggling. But it's worth noting that Donald Trump turned 77 later this spring, so it's not as if it's just one old candidate, it's two old candidates.
The tradition as well is to move vice presidents around based on the politics of the moment. If he's running, he has to redo with the Harris of California or for someone new. What is your research on that? What are your thoughts?
Has to be Harris. I can't see anyone new. I'd be shocked if that happened. Two of the biggest constituencies for the Democrats are African Americans and women. So he's going to fire an African American woman. Not going to happen.
Can you talk to us, Greg, about who's going to lead this campaign? Who's going to run the campaign and how much daylight there might be between this campaign and the one that the president ran back in 2020?
I noted with some interest, John, that the woman who's going to be heading the campaign is Hispanic. If you look at the weakest area of the Democrats' coalition right now, it's Hispanic voters. So that could be a pretty shrewd move.
Greg, I just want to build on some of that. In the last campaign, the president basically ran a campaign that was a referendum on Donald Trump, the former president. Do you think he's going to have the same luxury this time around?
Maybe not. He's got a problem he's got to deal with, and it's not age. It's an economy that is starting to soften, as you guys have been reporting. It's an economy in which inflation has not been subdued. Those are huge issues that he has to deal with.
Greg, as we take a look and start the ramp up here of the election cycle, I have to ask, what does it say to you that we have two people who are established political figures who are highly polarizing in some manners, and they're not popular in terms of people wanting them to run again? What does that say about the state of politics in the United States right now?
Yeah, I joke, Lisa, that the front runner right now is none of the above. And it is a real problem to see that. I still think there's room for a couple of new faces. There's rumors this morning about Tucker Carlson. I think that's pretty far-fetched. But Glenn Youngkin, the governor of Virginia, has not totally closed the door. He's in Taiwan this week. He's been getting a lot of campaign contributions. There almost has to be some new face over the next few months.
Well, you brought it up, so let's go there, Greg. Some of the shakeup that we've seen over at Fox News and Tucker Carlson out, and some of the lawsuits that we've seen recently. We've seen on both sides of the aisle a lot of castigations around highly polarizing rhetoric that is now coming into fire in a legal space. How does that shift the nature of this election?
If there was no Trump, I think Tucker Carlson would be one of the front runners. But there is a Trump, and I think that Trump will continue to get most of the Republican base. But you wonder with him as well, if maybe he peaked out in his polls over the last 2 or 3 months. And again, I would just reiterate, I think there has to be room for at least another fresh face or two.
What would those faces look like, Greg? Where would they come from? Who would they be?
Maybe Nikki Haley's campaign catches fire. It hasn't yet.
Okay.
Maybe Tim Scott of South Carolina. There are some other people in the Republican Party. For the Democrats, I mean, Robert F. Kennedy Jr. and Marianne Williamson are not serious challengers. I can't see anyone serious like Gretchen Whitmer coming in to challenge Biden. I think he's got a pretty clear path.
Greg, before we go, the heart of the matter here is this centrist Democrat. Let's remember, Greg, he was born the day the Russians went after the German Eastern Front in 1942. The heart of the matter is the liberals have to show up for a blue-collar guy from Scranton. That's the image. This time around, will the liberals show up?
I think that's a very valid issue. A lot of young people are really upset over Biden's decision to open up Alaska to oil drilling. I think that could be a big problem for him. And as I mentioned, Hispanic voters are wavering as well. So the traditional Democrats, the traditional liberal bloc is showing some cracks.
Greg, just a final word on the Florida governor, if you can. It feels like to me that people are writing him off before he's even announced that he's going to run for president. Greg, I just wonder what your reaction has been to that over the last couple of days.
Very good point. I think it's way too early to write him off. He's got a ton of money. The base likes him. He may have to become a little more likable. He may have to work on his rough edges, but there's a long way to go, and it's too soon to say he's out of the picture.
We're all working on that, Greg. Greg Valliere of HF Investments.
Likability.
Greg, thank you. You know, it's an ongoing process, isn't it? It's a lifelong pursuit.
I hear that
of
every
being
day.
liked. The latest news from the president. President Biden launching his re-election bid. The president making a formal announcement for a second term. We've mentioned that phrase a few times. So let's finish the job from the president of the United States. Going for a second term, Tom, we talked about the elephant in the room. He is 80. If he secured a second term, he would finish that term at 86.
And the thing important here, it's 6 o'clock Wall Street time, and John, for our international audience, what's so important is the single statistic, 560 days to the election. I don't think there's any other equivalent on the planet, and this is, by every opinion I've seen, a grind. And witnessed the video today and not a public announcement. Is he up for the grind? I think in the immediate weeks that will be the key issue.
Anne-Marie down in Washington, she's going to run to the studio. We'll catch up with her in about 20 minutes time. We've got to catch up with some of the price action as well. The equity market negative 0.5% on the S&P 500. Stock of the morning so far has to be this one right here. First Republic negative 20%. We'll do a full recap of the earnings for you. Tons coming through this morning and after the close a little bit later. But Lisa, we've got to start here. This stock down 20.
Yeah, and taking down some of the other regional banks with it, given the fact that it came out already very suppressed expectations and came out worse than people had previously understood with respect to deposit outflows, with respect to their plans going forward, cutting 25% of the staff. What is the path forward for profitability, let alone survival? What is that path?
I look for the chart. The chart's not good. This is not another day of down $3 or whatever. This print this morning is something. It's not that anybody expected it. I think a lot of people, frankly, expected it, but it's really important where the stock is this morning.
Deposits were much lower than expected, as Lisa indicated. And I go a step further. On the earnings call, didn't take questions.
That was really a red flag.
Analysts did not like that at all.
Oh, yeah.
Didn't take questions on the earnings call. I think it was about 15 minutes long. That's not what you want to see when a lot of people want some big answers to some tough questions.
We have to step lightly here. We don't want to, incite things or just go off the news, but the silence on this matter is important.
Down 20% in the pre-market on that stock. We'll catch up with Christopher Marinac of Jenny Montgomery Scott on First Republic in just a moment. Your equity market's negative 0.5%. The latest news this morning, President Biden launching his re-election bid.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Well, as you've been hearing here on Surveillance, President Biden asking voters to let him, quote, finish his job. The president has formally announced that he would seek re-election next year. In a video released today, he said there is still work to do to give Americans a fair shot. The president criticized what he called extremists in the Republican Party who want to cut government spending and curb abortion rights. Shares of regional bank First Republic plunged in pre-market trading. The bank's quarterly results reignited investor concerns about prospects for its business. Customer deposits plummeted 41% in the first 3 months of the year. The figures underscored that First Republic is still contending with the impact of last month's regional banking crisis. House Speaker Kevin McCarthy is refusing requests from fellow Republicans to change his $1.5 trillion debt ceiling proposal. Bloomberg's learned the bill will be sent to the floor for a vote this week under a rule that does not allow amendments. Now, if as few as 5 Republicans oppose the measure, it would be defeated. In Sudan, the two sides battling for control of the North African nation have agreed to a ceasefire. The Sudanese army and the rival Rapid Support Forces are backing a 72-hour humanitarian truce. The army says it was brought about by U.S. and Saudi mediation. And PepsiCo is forecasting organic revenue for the year that beat estimates. The beverage and snack company also posted first quarter sales and profit that was better than expected. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
Is it the OK is getting ready to make a decision?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Earnings season is here.
We haven't had a shocker yet.
They are minting money.
Markets are still volatile.
I think it's going to be choppy.
Bloomberg breaks the numbers first.
First quarter results impressive.
The revenue beat is amazing.
With exclusive expert analysis.
This is really important to watch.
Buy on the fear, sell on the news.
Where is the upside in this market?
Do we get answers to that today?
The bottom line speaks for itself, and that's what moves markets.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Expecting them to pretty much chug along and review their strategic options over coming months. But the first step is this workforce reduction of 20 to 25%. And I say it's kind of a first round. I think that we could see additional kind of right sizing of their expense base in coming months.
David Chiaverini there of Wedbush speaking on Bloomberg's The Close after First Republic's earnings reported yesterday. The numbers look like this, for the stock at least. We're down about 20% on First Republic in the pre-market. Looking at deposits really not great over at First Republic in the first quarter. These are the numbers relative to the numbers we expected. Analysts were looking for $137 billion. They got $104.5 billion. Deposits down 41%. This even after some of the biggest lenders in this country got together and deposited $30 billion there. The good news is that deposits since quarter end have stabilized, but there's going to be some big changes at this company.
John, I really take issue with the way this was reported yesterday by the financial media.
What did you like?
You did it correctly Many others didn't. It wasn't the net number. It was a number before they were saved by the big banks. And I believe that was near $100 billion statistic.
It was also, though, what they had to pay to keep those deposits stable, what they had to pay in order to stabilize what they saw.
Are they stable at this moment?
I can't weigh in on that. They didn't take any questions. I'm sure somebody would have asked them that, and they were not going to be opening up to that particular question. But what you saw was the deposit beta really became a problem for their profitability. It came in much lower in terms of their profitability than people were expecting.
In the savings and loan scandal of the early 1980s, Robert McTeer and others on that, William Isaac, we didn't hold press conferences like this with banks where they said, we don't want to answer questions. Unthinkable. I was sort of stunned by that.
After the chaos of the first quarter for this bank, and bear in mind also this happened at the very end of the first quarter. So we've got to see what the second quarter is going to look like. I think Lisa's been on top of this story a lot over the last week or so with the regionals, the small and medium-sized lenders in this country. Net interest margins, profitability has been hit at some of these banks, and ultimately that's going to mean something going forward from here. It's going to shape loan growth in this country in a material way. I want to touch base with the equity market just broadly. We're down about 0.5% on the S&P 500, negative 0.5% on the S&P this morning. The latest news, it comes from Washington, D.C. The president launching his re-election bid, making a formal announcement for a second term. We'll catch up with Anne-Marie in about 11 minutes from now, Tom, down in Washington.
Right now in banking, and surely expert on this, Christopher Marinac joins us, Director of Research, Janney Montgomery Scott, Philadelphia, and in Atlanta this morning. Christopher, you and I do the same thing. We get the Keefe Bruyette Bank Index out of 22 banks. And it's real simple. We're the latest debacle. They're priced back to 1998. How many others are there like FRC? Do you look at them as a discrete disaster, or is there enough of them out there to affect something like the 22 banks in the KBW index?
I think First Republic stands on its own, Tom. I really think that it's a once opportunity. Unfortunately, that was hit by friendly fire, and they have really struggled clearly for the quarter. Deposits worse than we thought, as you said. I think the conference call did not go well. I think the market didn't like the lack of questions, and I think there's real changes the company has to make.
Answer is combinations. The basic theme we've had is 4,000 banks, whether it's 22 larger regionals or not. When do we start to see the mergers that are just have to come?
Well, for First Republic, it could happen very soon. I mean, they need to do something. They either need to shrink the balance sheet or they need to find a buyer. They're going to have to raise capital either way. So if they sell the company, that avoids that. But they're going to have to take action as soon as today. I'm not sure they can wait a whole lot longer.
Christopher, who would want to buy a firm like this when they can get the deposits some other way and they're taking all the liabilities?
Well, there could be the attitude that you want the wealth management business and the clients that they have, even though they did lose advisors precipitously towards the end of March and also here in April. I think trying to get that business would be very attractive to a Goldman Sachs, to Morgan Stanley, to perhaps even JP Morgan. You'd have to have some regulatory relief if you're JPM to get that done from an asset perspective, but it's not impossible. But certainly I think the wealth management business would be the ticket that would be most attractive here.
I was struck this morning, Christopher, when I came in, that all the other regional banks are being punished as well. It's not just First Republic. It's even those that have reported earnings and came in better than people feared, whether it was Western Alliance, whether it was Zions, whether it was any of the others. Still, they are lower. What does that tell you about what is going on there, but also more broadly about sentiment?
Well, banks are leveraged vehicles. They work off of trust. And I think the confidence and trust has slipped with the First Republic news. And I think we just have to get through this air pocket today and this week. Most of these companies are very strong on capital. They have liquidity. They simply have question marks with the confidence given the deposit run that happened in the system in March. And so we're still kind of working through that. Think of it as a flu, and the patient's not completely healed yet. I do think that banks have to consider raising capital just to show that they can. It woed be a sign of confidence. That, to me, is where this ultimately goes. Maybe we're another 6 or 8 weeks away from that, but I think that's the answer to the problem.
Krista, I think we've all forgotten that this happened at the very end of the first quarter in the month of March, and I'm trying to work out what that might mean for profits going forward from here, Q2, Q3, Q4. What do you think that's going to look like?
So for First Republic, I think it's a break even at best, because if you reset their
funding costs again in the second quarter, it definitely takes away a lot of the profitability. We also think they have to shrink the balance sheet, and that obviously hurts the revenue side. If you sell securities, sell loans, et cetera, then capital, of course, comes under pressure as you're going to have to sell those assets at a loss. So that definitely puts pressure on the revenue line and the earnings for sure. But I think there's a case for the company to break even. It's just a challenge to execute. And I think the thing that we worry about is that this is a company that has been a growth-oriented company, not one managed for profitability. They haven't had a quarter above a 1% ROA since 2016. It's just not been in their DNA. They've been a growth-oriented bank, and it's a very hard pivot for them to do.
Does that mean they need new leadership?
Not sure about the leadership. I think it's a change in mindset. I think that they can do this if they change from a growth company to a profit company and make that immediate. I don't think it's impossible, but it is a mindset change that would be relatively big in their history.
Well, it's a mindset change, Tom, forced on them after the events of the last
is outstanding.
few weeks.
I'm thinking, John, of the Charles Dickens novel, 1830 England, where banks were not growth vehicles. It's just,
I'm not sure the regulator wanted banks to be growth vehicles anyway.
Lisa, get out the surveillance cork. I'm going to need it to protect the innocent here. I think what I would say is the zombies are going to get rolled up. How many First Republics are out there is an important question.
I've seen people refer to this bank as a zombie after the results yesterday. Chris, thanks for that. Good to catch up. Christopher Marinac there of Jenny Montgomery Scott. The stock is down this morning in the pre-market by a little more than 20%. We'll hear from PacWest, I believe, a little bit later on today. And then we've got to talk about some of the big tech names as well after the close. Google, Microsoft today.
Yeah.
And then I think we hear from Meta. And then on to Amazon later this week. And next week, Lisa, Apple, as you know, in early May.
And the threshold's going to be pretty high for them, given how much they've really led the gains. JP Morgan put out a report saying that ChatGPT is responsible for a significant portion of all gains in the S&P 500, and basically that rumors of ChatGPT has been greatly appreciated. I wonder how Microsoft is going to deal with that with Bing and the ChatGPT.
Of course, we're all going to Bing, aren't we?
That's
the future.
We're going to Bing with our ChatGPT search engine. I mean, honestly, though, how much do we get sort of a sparring of Microsoft and Google, the battle of artificial intelligence after the
Who can say AI the most on the earnings call, Tom?
Yes, exactly.
Just to kind of bid up the stock.
Again, get it's a surveillance cork Tuesday, I think. I'm going to run from that. What I'm going to say is we've got a sprightly nominal GDP of something like 5, 6, dare I say 7%.
Yeah.
And that's going to goose revenues and maybe give you some earnings stability.
We have to revisit this. The president releasing a 3-minute, highly produced video around about 25 minutes ago, launching his re-election bid. Anne-Marie Hordern running to the studio. We're going to catch up with AMH next. The president making a formal announcement for a second term. That conversation coming up shortly. Your equity market, negative 0.5% on the S&P 500. This program heads to Washington, D.C., the nation's capital, up next.
we're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Live from New York City. Welcome to the program. Here's your equity market on the S&P 500. On the S&P right now, negative 0.5%. Some earnings disappointments out there that we can recap in just a moment. On the Nasdaq, we're down by 0.4%. The Russell getting hammered this morning. We're negative 1.2%. Let's wrap things up at a bond market for you. Treasuries shaping up as follows on a 2-year, down about 3 basis points, still just about north of 4%. The story yesterday, one read on manufacturing in this country, just a bit softer than expected, bringing yields lower on a 10-year, down about 5 basis points. Your 10-year yield this morning, 3.43.72. The news this morning, 30 minutes ago in Washington, D.C., the President of the United States releasing a 3-minute-long, highly produced video. The headline, pretty simple. The President launching his re-election bid.
Let's finish this job. I know we can, because this is the United States of America. There's nothing, simply nothing we cannot do.
President Biden making a formal announcement for a second term. Joining us now in Washington, D.C., is Anne-Marie. AMH, walk us through this one, widely expected for a long, long time.
Yeah, widely expected, but here the president is laying down the groundwork, saying officially, I will be running for 2024. It really starts to put a damper on some of the whispers that people were asking within the Democratic Party. Is he too old? Should we look for someone new? The president saying, I want to finish this job. That's how he ends this video that he released today. And also, this gives him now a moment where he's going to be having events. He can meet with donors. He can really start to put his campaign team together, which they also released a statement looking at who is going to be on the national campaign team and who is going to lead him into 2024. And what this looks like it is setting up to be is a Biden-Trump rematch if you look at who is winning right now in the Republican race.
Emery, what's so important to me is he's got to meet with donors, meet with this, meet with that. Does he want to meet with the left? Does he want to meet with a huge part of a Democratic Party to the left of Joe Biden?
I think this is a president who is going to want to meet with everyone as he goes into 2024. He needs every single Democrat, left or right, to vote for him in the next general election. And what you saw in 2020 is this is a president who had to really lean into some progressive values and items on the left that they really want to see through. Things like climate change. These are things that were able to get youth voters out in large numbers. Student debt relief. These are talking points that the president is going to obviously need to have. We want to make sure he picks up those votes.
Do we have a sense of how important it is for President Biden to get reelected, to see the economy continue at pace, that sort of the economic growth can't necessarily face some of the vast consequences that people have been talking about for him to get reelected?
Well, the economy already is going to be a huge issue going into 2024. So while the president announces his 2020 race, we heard from the RNC, and this is what their statement was. I'll bring you a bit of it. They say Biden is so out of touch that after this current crisis after crisis, he thinks he deserves another 4 years. And one of the first things they talked about in this statement from the RNC was inflation will continue to skyrocket. So you can already see the Republicans are trying to make the economy the front and center issue, but that also is easy for them, right? Because at the moment, a huge issue that Republicans are really struggling to have a singular united message on is abortion. That's something the Democrats are really trying to harp on.
Anne-Marie, one other thing that stands out for me is this poll from NBC News. Tom and I were talking about it a little bit earlier on this morning. 70% of all Americans, including 51% of Democrats, don't want Biden to run for president in 2024. And the reason, nearly half of those respondents cited his age as a major reason. Yeah. Anne-Marie, what is his message to those people that ultimately, even within his own party, didn't want him to run?
Well, Biden continues to say that you all had doubted me in the past, and you were all wrong, and I plan to prove you wrong. He constantly says that when you ask him questions about his age or any other issues about whether or not he is able to continue on and take on a second term. Also in that poll, though, I think it was very clear that most Americans don't want to see another Biden-Trump rematch. They just want fresh faces all around. Although the sample sizing of that poll was quite tiny. But I think what you see a lot of times in these polls is that they are looking overall, when you look at moderates and independents in the country, they do want new faces. But when you look at hardcore on either side, they're happy to really go with their current leaders of the party. I think for the Democrats, it's more that they just don't have a working bench right now, someone that could really take over the mantle and win in 2024. So they want to stick with Joe Biden, who they counted him out as well in the last primary, and then he was able to rise to the top. I think for the Republicans, the situation is obviously is different. Trump has a major hold on the party, 30%, but is he able to win a general election if he was to become the campaign? Because obviously he's proven in the last cycle that he was unable to do so.
AMH, thank you for the wrap-up down in Washington, D.C., off the back of the headline that the president's made a formal announcement for a second term. We'll catch up with AMH a little bit later on this morning. We've got tons of news on the earnings front, tons of news. I want to start with UPS. They've come out just moments ago, this hour, saying that annual sales will come in at the low end of its guidance on the back of slowing U.S. retail sales, weighing on demand for package deliveries. This stock, Tom, in the pre-market down 5.6%.
Huge indicator for me. I'm watching futures overall. SPX futures negative 22, down 0.5% right now. I would say the basic theme this morning, John, and the many earnings coming out across all of what I'm going to call working America, away from fancy tech, away from the banks, is guidance lower would be my theme.
Job cuts too. 3M, Lisa. This one just crossing 6,000 jobs to go.
Yeah, and also it's similar to what we saw over UBS, full year adjusted EPS coming in on the lighter expectation of what people were expecting out there. Here's the question. These are the bellwether nuts and bolts of the economy. How much do we end up seeing an ongoing softening? Because it's not just UPS. FedEx shares also falling in pre-market trading in sympathy based on the fact that UPS sees fewer package volumes, especially coming from Asia, and not necessarily seeing the same kind of profitability. A real bellwether company at a time of real uncertainty.
Let's fold this into strategy. I should note 3M with a completely unacceptable 3% annual return over the last 10 years. Joining us now, strategist Jeffrey Yu of BNY Mellon. Jeff, let me go into you on a broader economic question. If we're seeing earnings would suggest guidance tepid, are you modeling recession around your arch strategy into this year and next year?
Yes, but only a mild one for the US at that. And on a global basis, I think the jury's still out. Looking at what's going on in Europe right now, they're certainly not looking at recession as a base case. China is reopening slowly at a slower pace than expected. But having just returned from Asia, I think the sentiment is pretty robust out there as well. So the age-old story, of course, if the US is starting some sniffles, it's the rest of the world, you're going to worry about catching the cold as well.
Jeff, it's interesting to me that within the equity market in the United States, tech is outperforming, but Europe is outperforming the United States. Can you make sense of those two things?
Well, I think tech outperforming, that could be, forward expectations and forward easing expectations coming through. If we go back to last month, some of the best days for tech were when Fed cuts as early as June were priced in. So I think that relationship between financial conditions and tech we need to look at as well. Europe's point of view, what's surprising is, this year the European household has done